only strictly the 11th Parliament must be rushing to do the thing. We can pass it today, send it to the President and say, I disagree. Take it back, and another Parliament will be here.
Honorable Jana, what is your suggestion then?
My suggestion was, let all the reports be laid today. We received. That's why when they were presenting both majority and minority, I didn't object. And then time be given for us now to interrogate. Because if I ask, can we all photocopy these minutes here? They are not on the iPad. We cannot. So that we are allowed. I go to the library, I look at it, I interrogate it. When I come here, I can now support the government position of moving from 150 to 250 with the knowledge that it's coming out of a study that has been done. Or I can reject the 500 by minority because I see they don't have a strong basis for it. So, Madam Speaker, I propose.
I have two questions now. I will have a question for Honorable Bua on suspension of rules, and then I will have a question on suspending this session. I will have a question on suspension of the House for the House to be able to accommodate the 3 days. Is that okay? Is that okay? No. The other has moved the motion. You're also going to move a motion, and I will put a question. Okay? I am putting a question subject to Rule 17 on suspension of rules, that Honorable Obua has moved a motion that we suspend Rule 14, Sub-Rule 214, Sub-Rule 14, and Sub-Rule 15 for the House to proceed with the tax bills. Those in favor say, and the contrary nay. The ayes have it. Honorable Odor. Honorable members, I wish I could advise you.
Madam Speaker.
Honorable members, I wish I could advise. We have the reports here. We have the minority reports here. You have the goodwill to debate on everything. The people who pay taxes are us. Me and Honorable Nandala, we own a petrol station together. So when we are talking about this thing, we are all business people. So we are mindful of the taxes out there. So let's discuss this and come to a middle ground, because it also affects us. It affects us. And we are looking at what effect it has on the population out there. So it is better that we discuss these things and complete it. Where we feel this has a tax burden on the population, we will not pass it as a House. I told you from word ago on the issue of taxing for Pampers. You want us to stop producing? We will not allow it.
Right Honorable Speaker and colleagues, I would like to give assurance to this August House that we had an opportunity.
I am still giving an example. When I was asked about taxing on withdrawal of money, I said you don't even bring it to the House, because you cannot. That is double taxation. You cannot tax me when I'm going to withdraw my money. The bank is also taxing me a commitment fee, management fee. At the end of the day, you tax the bank. You tax the bank on the profits that they have made. Those are things. Yes, Chairman.
Right Honorable Speaker and colleagues, I was just reaffirming your comments by giving assurance to honorable colleagues and the entire August House that in engaging as a committee. Within the committee, we have diverse experience and knowledge of members. Even when we disagree on some of the issues, we engage. And that's why, on the disagreed positions, a minority report is brought. And these are things that we can engage here. Like you've said, I would like to encourage our colleagues that these issues be debated here and we come to a common position. I beg to submit.
And as I was telling you, the report Honorable Masaba presented was a very good report. I remember last year, Honorable Katesh was even proposing what Honorable Karim is proposing today. Yes. Yes, Doctor.
Madam Speaker, I entirely agree with you. Actually, now that we've resolved the first point of suspending the Rule 214, and then you're allowing a free discussion, that helps to solve the problem. There are more other serious issues which my colleagues on the committee are aware of, which probably I shouldn't mention here. But if we are to go into that, even if we are to suspend the session and lay whatever is available, there are other issues which are not resolved by that. So I entirely agree with you that now that we've resolved the first problem of the rule,
can we debate?
Proceed.
Can we debate? Yes, Mehdi.
Thank you, Right Honourable Speaker, for your guidance. Since one of the members is whisking some issues that we don't know, we shall leave it to them. But Right Honourable Speaker, begging for your indulgence, I would like to bring to light the issue that touches that is clause 4 of the bill, that talks about amendment of the Principal Act to include VAT on software. Yeah, I have a huge passion for technology, and I know it's the only thing that will liberate the African person. It's the only equalizer that we have, the window of equalizer for unemployed, young, innovative people. You might laugh about it, but it's given an edge to emerging economies. Right Honourable Speaker, we were here last year, and I warned about the same thing, that URA was going into chartered waters where the achievement would be zero. It's back. Because things to do with technology do not lie. They are based on data. Right Honourable Speaker, without software infrastructure, there is no progression in innovative technology that you can get. The President, in his State of the Nation address recently, the past year, but also in his campaign manifesto, he talked about ICT as one of the backbones of developing the economy, but to also integrate the young, innovative people, but also transform society. We've spent a lot of money on digital transformation, but here we are now trying to promote the very same thing that destroys the fabric of digital transformation. Right Honourable Speaker, this as a gadget is hardware. Without software, it's useless. Without software, this gadget is useless. But let's look at the simple things that we use. If a certificate of financial implication was issued as regards this section, because I want to make it as simple as possible for everyone to understand, who is the biggest consumer of software transformational updates in this economy? It's the payment systems that we are using. For example, the government payment system, the one we use, is called the what? IFMIS. The moment you put 17% on all its software that is imported, we will have to come back here and appropriate 17% above the cost of what it's being used to run, at the end of the day, who is going to pay for it? It's the taxpayer again. All the contracts that you have predated to this, when you pass it, will have to have a revisional clause where you must revise. I can give you a simple thing. We have what we use here in technology is called the audiovisual technology. It's not from us. The software to keep this secure and have everything securely protected by the cloud so that your passwords in Parliament are not broken into through the software. It's something that is not developed here. It's something that is imported. That would mean any software provider that has a pre-existing contract with Parliament will have to come back to Parliament and we sign additional fees and revise this contract, and it will have a financial implication on all of us. But what am I trying to say, Right Honourable Speaker? That is as regards the government. Do we need to amend this section to have double taxation that you've been talking about? Which section is that? Section 28 of the bill.
That's why I was advising you.
Pardon?
That's why I was advising the House. And let's go clause by clause.
No, this is the clause. You're talking of the clause.
Exactly. Let's go to committee stage so that we are discussing a clause one by one for us to understand.
Right Honourable Speaker, first hear from me. At reporting stage is where you give a duly and full explanation.
Yeah.
At committee stage, you either agree to give away and take, or amend, or drop what is existing. But first I have to convince the members of the House that what we are doing is detrimental, because the report clearly says that they support. So I must oppose at reporting stage, then give my justification at the committee stage.
Honourable Medi will give you to give all your justifications and amendments if it deems fit.
Right Honourable Speaker, my proposal is we leave the status as is, and it may be treated by...
The Honourable, thank you for... Right Honourable, the matter that Honourable Nsereko, the Ayatollah, the landlord, the outgoing landlord of Kampala Central, is giving us...
And Team 115.
Is giving very useful information, but procedurally, as you've guided, this information, I wonder what kind of arguments he would make when we are at the committee stage. Will he be repeating himself? I'm raising a procedural matter. This is not a matter of Kira.
This is a procedural matter. You mean even up to now when you're leaving, you don't know the difference? Okay, you
Right.
address and we see.
Which order you
You continue.
And I know that Honorable Semuju loves me so much, but I will miss you, for the record. I will miss you in this house, and you will miss me.
A person who will be mostly missed is him for procedure. But on legislation, the person who will be missed will be Honorable Jonah.
Yes. So, Right Honorable, my point of procedure is that, which you've already guided, and I want to plead with my honorable colleague to accept, that at this stage, this is a general debate about the principles of the legislation. Now, if you're going to specific on the clauses, we can only do that successfully when we are at the committee stage. And I think let's go by the wise guidance of the Speaker so that we move. And yes.
Honourable members, do you agree with that? Jonah, I want you to debate on the clauses.
Thank you, Right Honourable Speaker. Formally, now I notify you I will no longer move the motion for adjournment, having read carefully that the vote may not be in my favor. At the declaration level of the results, given the interest of the Right Honourable. Madam Speaker, I now want to debate on principle. First, there were two concerns about VAT in the country raised by the traders. The first was the threshold, which has been dealt with in the proposal from 150 to 250. They may have other arguments. We have heard that the proposal was to go to 500. The second concern was the rate itself, because we know in some countries, including within East Africa, some VAT rates are as low as 16%. So even 8, some, but I know of, at least I can speak authoritatively of ones I know, about 16%. In the processing of this bill, we had expected either the government or the committee to address us on those concerns. What is their take on the rate, which has been argued? Remember 2 years ago when the issues of the traders downtown came, one of the proposals they made was that VAT has to be revised from 18 downwards. And we have not had any report regarding that matter. That would be my concern. The second concern is the justification for raising it from 150 million to 250. The committee and the minister premises their argument that in 2015 was the last time that the VAT was raised. I have done simple calculations. You have not moved from 2015. Because in 2015, 150 million, if you compare to the rate, exchange rate, the dollar then, was around 3,098. And now we have about 3,700. It means for every 1 shilling of that 150 million, we now multiply by 600, which brings us to around 240. So I want to dismiss that it is not correct that you have actually improved or raised upward substantially. What you have done is just to equate the value of 150 million in 2015 to the current value, which is 250. That's why I will agree that perhaps the proposal by the minority of revising it way beyond 250 will have to suffice. The second point I would like to debate, Madam Speaker, is on the credit allowed by foreigners and Ugandan citizens under clause 4. Yes, I allow clarification.
My brother, Honorable Odur, when you propose 500 million Uganda shillings as turnover to be threshold, gives an impression that this trader is able to make a turnover of 41.5 million in a month. So the clarification I want from you is how many of these people are you envisaging, given the research or proposal, that would fall in that bracket?
Madam Speaker, if there was any strong justification I was looking for to show that the government has not done any research at all, is the submission of the chairman. This is exactly what this committee should have done. Because my argument, and I want you to get it, is that in 2015, 150 million of 2015 is exactly 250 million today. So if your argument is that you are raising the VAT threshold, it should be beyond just compounding it to bring that value, that past value, into the present value. So for me, the 250 million now is not any different from the threshold in 2015. And that's why I wanted the government to explain, are you just merely upgrading or equating the 150 million? That's the point I was raising. Secondly, I was talking about the distinction between the foreigner and a citizen in as far as clause 3 is concerned, the principle itself. I have seen that you want to allow a credit, allowable credit, and you have set 10 million US dollars for foreigners and 5 million US dollars for citizens. Of course, this should worry foreigners, Ugandans who are soon might be called foreigners. But I don't want to go into that debate. But once you start coming into the law, and we are seeing you are bringing these terminologies between foreigners and now a citizen, and yet we know where we are heading. It should worry those who are living outside. But my point is, 18 billion shillings is not an easy amount for a citizen living here. I find it way too high. If you wish to allow a citizen who is going to construct a hotel within those 2 years, think critically. And I can ask the same question you have asked me. How many Ugandans now who will go into the hotels? Certainly, maybe we are very few here.
Thank you.
With exception of few. The last one, Madam Speaker.
With exception of...
Yeah, the last one is for the minister to convince us why he requires power to vary the terms and conditions as proposed. Because legislation, especially something to do with taxation, I always encourage that Parliament retains its powers 100% to be able to vary, because we are the ones accountable at the end of it all. So I see that the minister wants to have power on terms and conditions of payment of tax. These ministers, Madam Speaker, let me mention, they are not very easily accessible. I've raised it in the past. And they don't have the national outlook of things. We don't want to give ministers powers to start segmenting a certain proportion of society and favoring them by issuing this instrument, and yet others are being left. Let Parliament retain that power to be able to vary it.
Thank you. But, Honourable Minister, even when we are talking of looking for money, looking for revenue, I am also not comfortable with the so many waivers that you're asking for. You're asking for so many waivers. Why? You need to reduce on the waivers, but you can still go ahead and first answer what Honorable Dura said. No, that was a by the way.
It affects all of us. Madam Chair, at least I can reach the Minister of Finance, maybe for a waiver, but which I have not asked. It is very unfortunate that the people who are getting waivers are people who have been around and big waivers. Well, there are small boys and small businessmen out there who are suffering for lack of... okay.
My brother and elder and senior Nandala, I want to appreciate your observation. Indeed, it has been a concern of the committee, and we have always engaged the ministry and Uganda Revenue Authority. Without legislating in anticipation, in the bills we are handling, you'll see how, as the ministry and URA, we've given a blanket of waiver from all the years to 2016. I was given, I cannot allow.
Secretary General, welcome back from the World Bank. Madam Speaker.
The Secretary General was in Washington with the minister. So it should not be said it was only the minister. They were together.
Madam Speaker, the information I'm giving the House is that we imported, your school imported sports equipment. And you had to write letters, you had to call Matia Kasaja. Minister of Finance refused to give a waiver to bouquet their comprehensive school for sports equipment. Why is that others get waivers easily if Madam Speaker cannot get waiver? What do those people do behind the scene to get waiver?
Chair, Madam Speaker, what I was raising, you must have understood.
That's okay.
What you want to put
can
across?
We proceed?
Yes, Madam
Honourable members, I put a question that the Value Added Tax Amendment Bill 2026 be read for the second time. Those in favour say and the contrary, nay. The ayes have it.
The Value Added Tax Amendment Bill 2026, Bills Committee stage. Clause 1.
Clause 1. No amendment. Chair, no amendment. This side, no amendment. I told you I will allow you to. I put a question that clause 1 stands part of the bill. Those in favor say on the contrary, nay. The ayes have it.
Clause 2.
Clause 2. Chair, no amendment. I put a question that clause 2 stands part of the...
Madam Chair, clause 2 on IFRIS. I want to move an amendment that petrol stations are exempt from IFRIS. The justification: if you go to a petrol station, a motorbike person has come, he will take a liter. He pays 3,000 or 5,000. And the pumps which are there cannot issue an IFRIS. And if you tried to do it, then you will maybe combine at the end of the day and issue an IFRIS, maybe in the name of a pump attendant. A pump attendant will be looked for by URA that he has been trading in fuel. This is because even fuel is exempt from VAT, by the way. The only thing which is there is income tax, which is total at the end of the year. And also, there's already tax on every liter of what? Of fuel. Because as soon as you sell, the tax is paid there and then. And so, Mr. Minister, I want to ask your indulgence.
In petrol stations, can we look at the holistic transaction of the petrol stations? Because now the Honorable Nandala is talking about only the motorcycles, but you find in some petrol stations like Mandela's place, they have Javas, they have what? You get it? We have wheel balancing, wheel alignment. We are discussing. What do you think?
Madam Chairperson, I think we need to thoroughly understand this issue. From what I know, petrol stations are automatically connected to IFRIS. If you are City Oil, you are Shell, you automatically in the system. And also, from what I know, if you buy fuel, you are given a receipt. For me, when I put a fuel card, when I put a fuel card, they give me a what? A receipt. My driver shows me a receipt. Yes. And also, I know that even if I am to personally, not a minister now, buy fuel and I want a receipt, I can be given. So the question here is, because Honorable Mafab is saying it is difficult for border riders to account for IFRIS. Is that what you are saying? What are you saying? Because we need to understand this properly before we make a decision. Yes.
Honorable Minister, don't forget I'm your big brother. When you're asking me a question, you must ask with care. Madam Speaker, Madam Chair, what we're trying to explain, there are so many services at a petrol station, and these services are not exempt from VAT. For example, if you have a supermarket, that one you have a post sale. That one goes straight on IFRIS, whether it is a cash sale and whatever. Whether you have a wheel alignment, that one is straight. But fuel is first of all exempt from VAT to begin with. It's exempt because we have tax already on it. So what happens when somebody comes to take fuel, he's given a liter, he goes off. For you, you have a card because you have already deposited money on your card. It prints every now deduction because they have that mechanism for cards. But those who don't have cards, it's not possible. So at the end of the day, if you are going to issue one IFRIS receipt, you will get the total sales of a pump attendant and issue IFRIS in the name of that pamphlet tenant. And when you issue that receipt in the name of the pamphlet tenant, URA will look for that pamphlet tenant that you made the following sales or purchases. What we want to do, we want to exempt fuel from day one, like from as it is, fuel from share, from everywhere as it is. So that's what I'm trying to explain. What Madam Speaker raised, like Mandela wheel alignment, what, those are separate. Those are goods which are vatable.
Honorable Nandala, when you look at the tax procedure code, section 92, look at it. 92.1, read it. 516. Let me give you the new one. You are using an old one. Read it. 92. Go and read it on the microphone.
Madam Chair is saying, a taxpayer may issue an e-invoice or e-receipt or employ an electronic physical device which shall be linked to a centralized invoicing and system or a device authenticated by the Uganda Revenue Authority. Yes, that one is the post. But on the pumps, there is nowhere you can put that device. And the URA should come and justify it.
I'm Chair from Honorable Nandala.
You have actually answered yourself by the law.
The clarification I'm seeking, Madam Chair, Honorable Nandala, I thought the purpose of IFRIS is to track revenue and transaction. Regarding fuel, as of today, it is only one company importing fuel, that is UNOC. And anybody who purchases fuel, UNOC, you must pay cash. And URA has record because UNOC will not give you fuel on credit. And that record is picked by URA. And it can trace that petrol station A, company A, took this liter of fuel. And therefore, the inconvenience of creating IFRIS, we have so many young people in Honorable Botobo's constituency. In every center, they are selling fuel in bottles and so forth. And how will those one now be on? Madam Chair, I think the Minister of Finance need to drop this because UNOC and URA picks record of every OMC fuel traders in this country, and the taxes are paid instantly.
Honorable, do you want it to remain as it is in the bill? Because it says this section shall not apply to a designated person under subsection 2, where the designated person pays taxable supplies and is issued with an e-voice or e-receipt in accordance with the section 92 of the Tax Procedure Code Act. So what do you want?
Madam Chair, what Honorable Kanya has raised is a very important thing. UNOC supplies a share of fuel. Share will supply, or both is a constraint. Fuel. Now,
what do you want? How do you want amendment to be?
What we're looking at that now at both is a constraint. This person is selling the fuel which has already been given an IFRIS. But for him to be able to be safe, before URA comes to penalize him with those big, he must also issue what? An IFRIS to the border. That's where the problem is. Otherwise, the track is very clear up to the both person. So what we're trying to do is that for that type of business, of both and whatever, that one should not be really subjected to IFRIS because he's even by the is already accounted for. To what? I don't know if you have understood. Yeah, I am aware Katesh is here, also has a petrol station. He knows what I'm saying.
Yes, Honorable Katesh.
Right Honorable Speaker, Chair, I I don't have a petrol station, but I think the major point that he's raising is that the supply chain of fuel is easily monitored and normal, and therefore the debate should be, do we necessarily need this amendment, given that we have safeguards in terms of monitoring the supply chain of fuel to be able to enforce compliance? And given that there is no VAT on fuel, I think the minister can look into the merits of this argument, and then we have a middle ground and move forward.
Actually, as it is, we don't have an amendment. No, what I'm saying, the amendment is not made, it is stayed as it was. Yes?
Chair, Honorable Nandala's argument is true, but I don't think it applies to this section, because this section is majorly looking at the large taxpayers, those who withhold 6%. So this is actually coming in to enable whoever is submitting on IFRIS, whoever is giving an IFRIS receipt, is not actually required to withhold 6% of that money. So it does not apply to this clause. So this clause stays as it is in the bill.
Madam Chair, if you bring a bill like this, and you are now bringing section 92, and it is open,
Honorable Chairman of BCU, it says it shall not apply to a designated person under section 2. And that's what Honorable Karim.
Chair, the view is, if Honorable Nandala is a designated person and he withholds, of course, the 18% VAT if he's withholding 6%, but if Honorable Nandala issues an e-receipt, then he shall not withhold that 6%, because the e-receipt already shows URA the details of everything that he has submitted on the invoice.
Madam Chair, this one is not the contentious. The contentious issue is the station of both of us to issue e-receipt to a motorcycle. This is where the issue is. We're not the chain is well.
Honorable members, let's look at the amendment, and the shadow the other side has accepted that it does not apply. So Masaba, you're in agreement that we maintain as it was.
Chair, the clause should be maintained. This is actually preventing people from being required now to withhold other people's money, because already the IFRIS receipt already shows.
I put a question that clause 2 stands part of the bill. Those in favor say and the contrary nay. Honorable Nandala, have you seen, even when you go, you're not going to be missed. Honorable Masaba has come in to
No. You definitely the world
very dangerous.
The world is going to use my head. No problem. Even he knows that the world wants my head. Madam Chair, what I'm trying to say, I am not deleting this clause. I am maintaining it, but adding on that where a pump. This is what I'm saying. There's no need an IFRIS at a pump. That's what I'm trying to say. I agree with this.
That is operational. That is operational.
URA will come for you.
No. That's operational. That's operational. Me and you, we own petrol stations. Clause 3.
Clause 3.
Clause 3. No amendment.
Clause 3, the committee is proposing something different, and for us, in our minority report,
committee is saying no amendment.
Oh, for us, we are proposing, instead of the 250, we are proposing 500. The proposal, this is about the threshold for someone to be required to register for VAT, for VAT. And the threshold, which is being increased from 150 to 250, and in our minority view, I think I justified that. We are proposing for it to be set at 500 million shillings instead of 250.
And what is the CBA, the cost-based benefit
Chair,
analysis?
In our analysis, we are trying to eliminate, because the committee didn't provide, but when we look at the documents that URA provided, and we see that 3%, only about 3%, we want to, that are the small businesses. We want
when
to
it is
widen
150, how much does government collect?
Those figures were never provided by the ministry.
When it is 250, how much does it collect?
The figures were never provided by Ministry of Finance.
For you who is giving a minority report.
For us in the minority report, we are looking at...
And when it is 500, how much does it collect?
I think let the minister first present those figures, because, Right Honourable, our argument is we are looking at in a business perspective.
I have another accountant there, okay. Silo.
Madam Chair, I want to support my young brother from Mbale. My thinking is that when we lift it to 500, we give an opportunity for people to plow back money to their businesses, and that will instigate the economy to do better. So the higher, for me, the better. 500 will stand better for now. And I buy that idea. It's a good one. Many people are struggling. Thank you so much.
But the 500 has very huge revenue collection. Honourable members, we are looking for ways of getting revenue. And that's why I'm asking, when it is 150, how much money do we raise? 250, how much? And 500. So that we are able to evaluate. Yes.
Thank you, Madam Chairperson. Madam Chair, our proposal is informed by a study which we made. And in the study, we looked at 3 scenarios. Scenario 1 was to change the threshold from 150 to 250. And this would give us the net revenue of 349.6 billion. Scenario 2 was to raise the threshold from 150 to 300. And this scenario, after analysis, would give us a net revenue of 358.31 billion rather. And what are we looking for what are the parameters we are looking at? We are looking at new revenue, we are looking at old revenue, we are looking at the revenue gain, we are looking at the productivity and the competition loss. We are looking at revenue from voluntary registration, and we come up with the figure. Scenario 3, Madam Chair, was to increase the threshold to 500 billion, which Honorable 500 million, which Honorable Karim is trying to defend. And this scenario, from our study, results into the net loss of 6.99 billion Uganda shillings. So, Madam Chair, our recommendation, after looking at the 3 scenarios, we recommend that we take the 250 million scenario for now, because it is the best for both the taxpayers and for us, and we don't want to lose the revenue. I want to invite my brother Sairo to debate with the numbers here, not guesswork. Here, let's support our justification with the numbers.
Information, Madam Chair.
About?
Yes, Madam Chair, thank you very much. Madam Chair, we need to understand that VAT is an indirect tax. And an indirect tax, the burden is on the final consumer, not the trader, not the businessman. And we are talking of broadening the tax base. Therefore, if we put the threshold 500,000, we shall have reduced the base. But if we put at 250, we shall have a wider. After all, it is the final consumer who takes the burden of the tax, not you, the businessman. I thank you.
So what is your proposal?
My proposal is that we go with 250 because it takes a wider base and we want to broaden our tax. Thank you.
Thank you.
Madam Speaker, I don't have a definite position on this matter. But my question is, the minister chose to do a study, and in his reasoning, as he increases up, he was looking at the revenue. Why didn't you reduce to 100 or 50? By that logic. Because your logic shows that the lower, you are likely to have a wider network. And that's why I insist.
The tax collection becomes hard because of the number of
it should be informed by
customers.
it should be informed by the report. And that's why I insist that a piecemeal study of picking something, then you say you are studying our tax policy, is actually wrong. There must be a comprehensive study to inform. In fact, these figures he presented here, he cannot defend. He just wrote something. If we increase to 300, we get to this. If we increase to 500, we get to this. There is no evidence that that study took place. Even the chairperson we ask here, you lay in your minutes, it's not done.
No, the study was done. Yes. Yes, Honorable, both. You wanted to put him on order.
One thing is very clear from Honorable Jonathan Odur. He said he had nothing, no position which was definite. But he has belittled ministers in this floor. I don't know whether it's the particular minister or the ministers generally. At first, he said, we don't do research. He needed a study. Now there's a study. He's saying he scribbled it. Not every study, as has been stated, government knows that there are so many people
And if
informed.
when you say late, the thing is for only accountants.
Me
and
you,
it has been late. You see, that's why you see my young son here very active. He must have looked at it. He's coming with a solution.
Right, Honourable Speaker.
I said Anifa.
Right, Honourable Chair, government is the tax collector. They know the challenges of the informal sector. If they are saying at 250, we should be able to go with them, that we don't ask them to go below or above. This is supported by the minister, and I believe that, and Honorable Nandala, you've been referring to, like my constituency, we don't have such traders. But I appeal that we move. But you can clarify.
And I want to ask you, Madam Chair, before you, just 1 minute. Honorable OO, we moved the income tax from wherever it is, now it is 500 million. We moved it to 500 million. You don't need to file accounts. You pay. You have 500. You pay a percentage of the 500 million. If that is the process we are moving on, 500, then it would be also good that the same thing is applicable to what? All taxes, like VAT, also to 500. Instead, I want to agree with my brother Taewa when he says that it's the last consumer which pays. I want also to ask a question. If the people who are paying 500 are not going to file returns, where is the loss? Because it means they will be treated as final what? Consumers. So now the more the final consumers are there, the better.
Madam Chair, Madam Chair, I want to answer Honorable
Madam Chair, thank you for giving way.
How about Isaac? I will give you. Okay, Isaac, you first start before, because I know.
Thank you, Madam Chair. Madam Chair, I see the argument of Honorable Masaba, because he's trying to look at the bigger picture of the SMEs. Because if we actually reduce the tax compliance, the tax cost compliance for SMEs, then we are boosting business, whereby revenue will in turn collect that revenue in other ways. So it actually makes a bit of sense on what he's trying to raise, to increase the threshold to 500 million in terms of boosting the SMEs, and also in terms of increasing the tax.
But have you looked at the cost-benefit analysis, the taxes that will be collected? It will be a loss.
Madam
That
Chair,
is according to the study.
yes. No, we are looking at the bigger picture. Yes, the VAT collection will reduce here, but there will be in the growth that we are giving the SMEs, revenue will increase.
Okay.
We are at the higher post.
How about?
Madam Chair, my senior brother in the profession, he knows that there is a difference between income tax, which is a direct tax, and VAT, which is an indirect tax.
Yes.
Now, the 500 will be paid under income tax if you have received that income. And you, the businessman, you are the one to pay that income from your business. But the VAT, which is an indirect tax, is paid by the final consumer who has consumed the good or the service. So what we are saying here is that, yes, if you put the VAT threshold at 100 business that you will attract, so there will be so many informal businesses, those who cannot even manage to have records, and they are difficult to track. But a medium of 250 or 300 makes it, at least, this is a big business which has records, which can easily be tracked, and therefore they can easily burden the tax base because the tax is paid by the final consumer who's...
Masaba?
Chair, after listening to the arguments and the minister, because the minister gave us figures, there is a one of 250 where we have a net revenue of 349. Then there was a one of 300 million. It still has a net revenue, which is higher at 358. Then I think it's better to go for 300 because our proposal, you didn't provide us with the figures, but according to what you said, we have a net loss as a country, which of course I wouldn't want as an economist. So I propose that we go with at least 500, at least 300. And yes, for now, instead of substituting 200, we substitute 250 with 300 million shillings. That's my proposal.
Madam Chair, I agree with the new proposal from...
yes, continue.
I agree with the new proposal by Honorable Karim that we increase the threshold from 150 to 300 because it will still give us we shall still meet our objective with this proposal.
I put a question that clause 3 be amended as proposed by Honorable Karim. Those in favor say and the contrary nay. The ayes have it.
Clause 3 as amended.
I put a question that clause 3 as amended stands part of the bill. Those in favor say and the contrary nay. The ayes have it.
Clause 4.
Clause 4. Clause 4.
Chair.
Clause 4, let's start with the chair, then you come in.
Right Honorable Chair and colleagues, the committee proposes this amendment on clause 4. Amendment of section 28 of the Principal Act. Clause 4 is amended in paragraph A by substituting the words 500 million United States dollars with the words 1,500,000 United States dollars. Justification: to reduce the threshold for citizen from 5 million United States dollars to 1,500,000 United States dollars.
Yes.
Chair, our proposal is 500,000 United States dollars for a citizen investing in a rural area, or 1.5 million US dollars for a citizen who is investing in an urban area.
The change is on location.
Yes, on location.
Urban and town.
Yes.
Yes, on a
we could benefit from the justifications why he has made the swap, so that we see through your lens.
He has only added that he's okay with the figures, but what is adding is that the location, that for urban, and he wants a justification, please. Masaba, he wants a justification for your...
I thought as my senior colleague was following the report, but when I presented the report, my view was that we need to have a way of intensifying more of our people who are investing in rural areas, because when you look at people investing in Kampala urban areas and the developed national parks, they have the capacity. But there are people who are investing in the tourism sector in areas that are still underdeveloped.
The
like Sipi, Kapchora. You'll not find anyone investing 5 million in Kapchora. You'll not find anyone investing of 5 million on Wanale. So
it
my
motivates.
view is to motivate to have certain standard of investment.
It is like an initiative. Yes, initiative.
Madam Chair, when the committee engaged the ministry about the proposal, we were informed that the amendment targets super investors. And that's why the threshold was so high, to the extent of considering 5 million. However, when we went into a debate, we realized that even $500,000 was rather on the lower side, which is equivalent to the house cost of my brother Nanda Mafavi. So that's why we adjusted to 1.5, Right Honorable Speaker.
Madam Chair, I want urban area is Kampala. Let me give an example. Katesh, listen to this. You know in Chisoro, where Buyindi is it urban? It's rural. Yet the tourists go there more than going to Mbale town, than going to Jinja, because of gorillas and whatever. I think we have to be very careful what is urban and where are the tourist attractions are. So for that purpose, Madam Chair, my only request I want to ask my younger brother is the period. A period. $1.5 million, if you multiply by 4,000, that's 6 billion. For a member of parliament who is going to work for 5 years, you are saving 10 million per month, you need 120 million. To get 6 billion, you need 50 years. So, I'm just giving them an example. So I wanted to propose that instead of talking of 2 years, we should look at a period of, say, 5 years. The justification is that a person is developing his hotel, he is not going to finish it in 2 years. It could take a period of about 5 years. So, Mr. Minister, consider on 5 years because the best period.
Chair, the Minister.
Madam Chair, I want to thank colleagues for their concerns. However, I want to invite them to think through the objective of this proposal. Our overall objective of this proposal is to we want to maintain focus on the high impact investments. That is why we are saying, let's give this favor to people who can invest 5 million and above. We are not looking at me who is saving 10 million per month. How am I going to build $5 million? No, this is not for, I will have other favors somewhere, but not on this one. So this one, Madam Chair, I want to invite colleagues to support this threshold because it is targeting the 5 billion. We are looking at high impact investments which can give us 100 jobs, which can give us tax revenue, which can help to propel the economy. Information from the accountant.
Right, Honorable Chair, the information that I wanted to give my brother is this. yes, we are aware of the high impact jobs, investments. But in terms of location, if you come to a district like Ikumi, you hardly find a factory. Nobody wants to invest there. But we want to motivate people to invest in all parts of the country and not only Namave, not only Kampala. For me, that is the thing. So location should move with the pricing. The two should be intertwined.
Honorable Silo, as an accountant, I would have expected you to know that there are other laws that give incentives to such investors. Yeah. Yes.
But Honorable Chair, my colleagues
let's not talk as a political.
Let the minister name one law. Which
Madam Chair, the
Investment Code Act.
Because right, Honorable Speaker, when you look at, for instance, the issue of initial capital allowance, we have decided in the past that when you invest in Namambe, for instance...
Silo, speak as an accountant.
Madam Chair, I want to request the Minister to be realistic. Because the bill he has brought talks about developers of hotels or tourism facilities. A tourism facility could be a cable car on CP Falls in Kapchorwa. You are not going to invest $5 million, which is about 20 billion, to do a cable car in Kapchorwa or on Rwenzori. It is certainly less than that cost. No, that because you are the amendment is talking of hotels or tourism facilities. Therefore, our proposal of, even if you are looking at the hotel, Madam Chair, you cannot over-invest in an area where the return of investment is too small that it will not make you to recoup investment. You cannot put a 20 billion hotel in Vudadiri or at Kapchorwa because the return on investment is very low. The occupancy rate, we have 1.5 million tourists coming into the country. So if you are going to invest a 200-bed hotel...
So what is your amendment?
So my proposal, Chair, I go with the committee report of at least 1.5 million, which is around 4 billion. And that one will enable us to support the ATM strategy, attract investments across the country in different parts of the country.
Minister.
Madam Chair, I have a strong position that we should not lose the whole objective of this proposal, because we are looking at luxurious hotels, and the luxurious hotel, Madam Speaker, Madam Chair, is not that thing which Honorable Katesh is talking about. It is something else. So, Madam Chair, I would like to appeal to the Committee of the whole House to support the government proposal that we maintain this support to people who can invest 5 million and above. Thank you.
Chair, I am in the hotel industry. I want to state, Mr. Minister, 20 billion is a lot of money for somebody. 20 billion is a lot of money. And I'm bring practical reasoning. I'm in the hotel industry. The 1.5, you will have a modest hotel with about 30 rooms, which also is allowed for purposes of having waivers on import of hotel equipment and the rest. So if you want to promote the hotel industry, the locals should invest. By then the locals like employing their fellow locals. 1.5 is the best, and even the period is too small. The 2 years, that means 2 years, that means you go to housing finance, borrow money at an interest rate of 19%. At the end, that facility will be taken and sold away. Just the better period for people to be able to invest, because people invest money, not necessarily all their money is theirs. They borrow money on the stock exchange, in banks, and invest. For you to encourage more tourism in the country, I think 1.5 million is better dollars, but also the period should be increased from 2 years to 5 years. The justification is that we need people to invest, not somebody to be in a hurry, and because he's worried he can do something which can break tomorrow.
Yes. Thank you, Madam Chair. Madam Chair, I need to interest the Minister on the history of this country. For those that have set up very powerful hotels, they didn't need that threshold. So, anybody who has the capacity to set up such a powerful hotel doesn't need the threshold. But we are looking at a situation of attracting more people into the business, into the investment, so that we benefit more. So if we only look at the high-end class, we shall suffocate the low-end class. So we requested the Honorable Minister, look at the committee report, because this is a full committee report that is really suggesting $1.5 million. So we interested the Minister to look at the committee report and concede, so that in the future, if we have to look at the high end, then we shall look at that later. Thank you.
Yes, Minister.
Madam Chair, before the Minister.
Minister.
Madam Chair.
Yes.
Before the Minister comes in, I want us to understand this point. Yes, the Minister wants to bring in the investors who are building the high end. But this is a tax credit on materials being used by someone in constructing their hotel. So it is unfair to our citizens, to our people there. If we can only give a credit to the foreigners who are earning, someone who is investing $5 million, and then someone who is investing $1 or $2 million does not qualify to claim that tax credit on the construction material of that hotel. So I think, in my view, the Minister is being unfair to our people. If we are to be fair to our people, we need them to also benefit from this tax credit. We are not giving them free money. We are telling them, if you're constructing this hotel, you can claim back the VAT on construction material of this hotel facility. And the other issue was about time. The committee, Honorable Nandala suggested 5. Me in my minority with Honorable Semuju, we had requested for 10. Because we know a hotel facility takes long to construct. I've seen Kabira Sudira has constructed for more than 5 years. The construction is still going on. Someone who has a lot of money. So how about
yes,
the information I am giving Honorable Masaba, that even the construction of parliamentary chamber started in 2014. Up to now, we are still constructing.
It is even not going to end.
So I'd given information to Honorable Semuju. So, Chair, my view is
Honorable members. Honorable members, it must be on record that the parliamentary chambers is not a hotel. That's number one. Number two, we came in here when the chambers were already being constructed. We got it being constructed. And we are not the ones who did it. We are not the ones who did the procurement. And
Madam Speaker, I am not blaming you. That's why I said it started in 2014. You also inherited the problem. I am only emphasizing that construction can take longer than anticipated.
Madam Chair.
So, Madam Chair, as still on the floor, I had given, in my view, I have conceded to the committee position of separating the urban and rural areas. So we had agreed on the 1.5, but my view was that we put the 1.5 in the urban and then rural 500. But I do propose that we maintain the committee position of 1.5 and then increase the time from 2 years to 10 years as proposed in our minority report.
Madam Chair.
Can we have order?
Madam Chair, and indeed we always have good debates in the committee. When this matter was before the committee, we tried to strike a balance and said, yes, indeed, we need these super hotels. And that's why we are not proposing an amendment on the 10 million for foreigners, so that for them they can cater for that class, and then give an opportunity for the locals or the citizens to invest at 1.5.
Honourable Minister.
That's where we are disagreeing.
And on the issue of the time, it's not realistic that you can have a hotel in 2 years. Members, I'm about to send you to National Theatre.
Madam Chair, why the 2 years? We don't want this window to be abused. We want you to get a window, do start and finish. We want to support the start to finish projects, not projects which are staggered for a long period of time, because you open a window for abuse. Madam Chair.
So why don't you get a middle ground of 5?
Madam Chair, by the time we bring these proposals to the House, there are a number of stages we have gone through. There are a number of consultations we have made. Yes. Yes. Madam Chairperson, I therefore would like to pray that our proposal be supported by the House. Madam Chair, I am always someone who wants to get a win-win. On this one, when you see me insisting, just know that I am constrained. And I pray that Parliament supports our proposal.
Madam Speaker, the procedural matter I'm raising, which is helpful to the Minister, as Parliament, we desire transparency and full disclosure. When I sat, it occurred to me as if this proposal is at the tail end of some negotiations. Potentially an investor or somebody is already in the pipeline. We don't intend to stand on the way. But as Parliament, we deserve to be given full information and full disclosure in case there is something really special coming up. Let the Minister put it on the record, and then we'll know that we are dealing with something which is unprecedented. So would you now go ahead a little bit and explain to us who is that person you have in mind?
Honourable, what he's saying, if you have full information, if you have full disclosure, specific information, not people. Maybe we want, maybe because of AFCON, we have people who are ready to invest. In 2 years' time, they will have finished. That could be one of the things. Yes.
Madam Chair, let's look at the example in this city. We have 2 major hotels which have been undergoing construction. One is is it Hilton?
Hilton.
Here, and there is a Marriott. How many years have they taken to be constructed? The Minister should be able to answer that. If you look at the construction of a hotel, it is a process. There is feasibility study. There is it takes a time. So you cannot say within 2 years you deny someone input credit, yet knowing that is actually creating an opportunity for you to earn more money in future. So my request to the Minister that we should not shoot our own efforts. We are promoting ATMs, including tourism. And promotion of tourism should cater for both local Ugandans and foreigners. You should not put a provision. It's like saying, everybody jump 5 meters, I give you food, knowing nobody will reach 5 meters. Let us give an opportunity to Ugandans to invest, and also give an opportunity to foreigners to invest. And this does not cost you revenue. We are only saying allow input credit.
Madam Chair, what Honorable Katesh has raised, the reason why I want to claim my VAT, so that I buy more materials to make the hotel what? Go up. And I don't know why the Minister is insisting. If he has specific people in the Ministry of Finance who have $5 million who want to invest in hotels. Let him come and also put them in the law that now this one and this one are going to build the hotels in 2 years.
Thank you, Madam Chair. Madam Chair, we are having issues with the minister. Madam Chair, the minister.
Yes, Honorable Sewungu.
Thank you, Madam Chair. Madam Chair, through to the Minister, I don't know they have taken a keen interest in knowing what is happening in the hotels. You might look at taxation, but look at those Excise hotels and visit them. There is no business. And your interest as government is having fair taxes and charges on these businesses to get money. However, but you visit them, go to Entebbe, you will see what is happening. There is no business. So you have to be very careful. The more I create interest and better charges and taxes on them, it interests people to go there. So I would pray that you make a middle balance between what the committee is saying and the minority report. Thank you, Madam Chair.
There is a motion.
Madam Chair, we have sufficiently debated this matter. Nearly the position of everybody now is known. The position of the minister, of the committee, and of members. That being the case, I move, Madam Chair, that you put the question.
Thank you. I put a question. No, let's first get from the minister. It's not a matter of putting a question, right? It has revenue implication. Huh? You see, we are going to do supply.
Yeah.
And when we are doing supply, Omara is there looking at me. He wants his road for 2K, Abimo, where. But at the end of the day, if we don't have the money to finance, he will be the same person to complain. So that's why I'm not putting, let's hear from the minister, whether it has a financial implication. Before, Jonah? You know, Jonah, I will allow you to speak.
Madam Speaker, thank you for allowing me to speak. Of course, the Constitution allows me to speak also.
No, because I will miss you. I told you I will miss you in legislation.
I'll look for you. Madam Speaker.
By the way, he's my son. Don't when he says I will look for you, not in other ways. He's my son.
So, Madam Speaker, the point I want to raise before the minister comes is that whereas we are processing a tax bill, looking at the opportunities to raise money, this particular provision is not about raising money. It is an incentive, or you could say a waiver, something like that. So when we are debating it, it's a motivating factor. And the minister had moved very well. He said there were certain things leading to this, like it's at the tail end, meaning this is a super specialized project that has been discussed through. So would it be transparent and open, and even avoid having that demeanor of fear to disclose to this parliament what they are, because he's not even having eye contact. There's something he's hiding, and I want you to reveal on the floor.
Like what we had in the Commonwealth Resort, when we agreed, we said, let's close our eyes. This must happen. Honorable Minister, the floor is yours.
Thank you, Right Honorable Chair. Right Honorable Chair, today we are here debating tax bills. And there is a reason why we normally start like this. Because we must know how much money we have in order to supply to the spending entities. Madam Chair, I earlier said that all these proposals were brought have gone through a number of stages. We have studied them, we have analyzed the revenue implications and the implications on the budget. I would wish to pray that this House considers this proposal, because I'm looking for 84.3 trillion. A movement from 72 trillion to 84 trillion must be financed. And these proposals
senior comrade and colleague, you know I have a soft spot for you, but you're just being too general. The world is waiting for data from you. From this, no one ever, the first one you took, the second one you took, others you're going to take. The question is, what justification are you giving to say you're looking for revenue? And now you're saying you want people to claim credits when they are foreigners at 10 million, and the committee agrees with you. Then it comes to the locals, and these are people's representatives, and they tell you, wait a second, if we want to grow our local people, who were here, you remember the Honorable Gwang was here trying to clearly tell people, please invest in hotels, in Hoima, in Masindi, in Lira, etc. And there is a good proposal from the committee, and it's a win-win, and we come back every financial year. And the issue is, you've gotten 1% of this, not in a bad way, comrade. You have $10 million for a foreigner who wishes to come because reason, justification, they get this money cheaply. They borrow it cheaply. Now, the justification for lowering the threshold for nationals is that the cost of borrowing is high. It's just a simple justification. And we are also saying we want to promote the local people. Why? Because polypotentially, they will have to employ local people as well. So let's grow together so that this is a people-driven financial budget that you're presenting.
Thank you.
That from revenue, we are collecting it together. Then we might reconsider it next year. It's annual, try.
Thank you.
That is what we are trying to persuade you. We are not saying drop the entire section, close as it is. The committee has agreed with you on foreign investors. Big tick. You can clap for yourself on that. But they are saying, on your own people in Ruchiga, please go down a bit. And he has segmented it to say, rural, do it this way. In Rwanda, someone is trying to put up a structure in order to harvest some money from tourists that are crossing from maybe Rwanda or in Congo. Can we go down to 500,000? And when it comes to municipalities in Entebbe and others in Kampala, 1 million or 1.5 like they have proposed, so that next year we see, has it been attractive to people? Has it helped us in any way? In any way, we are just waiving. This is a waiver to others. So as you waive for the foreigners input, we are also saying relax for our nationals and give a longer threshold, because the justifications have been clear. Name one hotel that has been built in 2 years. If you name one, we give it to you as it is.
Thank you. By the way, members has some of the assumption that this is not revenue making. It is because we are attracting investors, and then yes.
But yes. Madam Chair, I want you to read. It says a credit is allowed. No, Madam Chair, a credit is allowed to a taxable person.
Thank you, Right Honourable Speaker. Right Honourable Speaker, I agree with the Minister that this is going to attract revenue, but not in this financial year that we are handling now. But two, I am wondering why the Minister is insisting, when the 10 million has been accepted by the House, we are simply saying that also help our locals to invest in this. And when the locals invest, we will get more revenue because we will have so many hotels constructed. We will have a lot of revenue that will address the issues that the Minister is worried about. So I want to persuade the Minister also to agree, because this is helping our country, it is helping our locals.
Thank you.
Chair, I believe we've had enough engagement on this, and we should agree to disagree on certain factors. And I want to propose that we amend that section as proposed by the committee, and then for the period increase from 2 years to 5 years. I do propose, Right Honourable.
Chair, even the minister is worried for nothing. Let me read it for you. A credit is allowed to a taxable person who develops a hotel or a tourism facility and invests the amount, as we are saying, which is done in 2 years. Now we're saying 5 years. That means the allowable part will prior to, it is talking about prior to the date of commissioning of the hotel. That means even now what we are trying, if you do it, you'll get your credit in 2 years. If you take 5 years when you are commissioned, you'll get your credit in it. I am sure by then you will not be a minister of finance, you will be a minister for tourism. You don't need to worry. So this is not in the current, it is in the future.
Anyway, you are not the appointing authority, but the issue of prior to the date of commissioning the hotel or a tourism facility. Honorable Minister. Let's hear from the Minister first. Honorable Minister.
He's on pressure, that is true. He's on pressure. Yeah, yeah. And let me, why go for those high end when even 6 of the locals can meet what the one person can bring? You see, we are more. There are more people who can afford the 1.5 than those who can afford. You get the point? So they also cumulatively accommodate what he's talking about.
Madam Chair, I have a procedure issue. In the practice of this parliament, either you take a vote or you stand over a matter. Madam Chair, can I address you? In the practice of this parliament, if you can't take a decision, you stand over a matter. So if we want further consultation, Madam Chair, I am proposing we deal with other matters.
Honorable, you're not going to advise me what to do.
I am
okay.
I am using a rule.
You will not advise me what to do. The bill is brought by the minister, and I am telling the minister how we should handle the house. Minister.
Thank you, Right Honourable Speaker. Right Honourable Speaker, I want to say this, that there is no proposal in this law, in these bills we have brought, which do not have significant revenue implications, either by reduction or increase. But the bottom line is that out of this process, we must get additional money to finance next year's budget. And that is why I want to appeal to colleagues that support me raise this revenue so that I am able to do your roads, I'm able to do your electricity, I'm able to do your hospitals, I'm able to do everything. And
Yes, honourable members. Honourable members, you've heard from the sponsor of the bill. I am putting a question on two, on the committee and on the bill. Yes, on the committee report first. Then I will put on the... Okay, I will put one question. I put a question. I put a question looking at what the ministers explained. Basing on what the ministers explained, that the committee report be amended as proposed by the committee. Those in favor say aye, to the contrary nay. Have you heard? If you're not in favor of the committee recommendations, you say nay. I am saying, based on what the minister has explained on this clause, basing on what the minister has explained on this clause, I am putting a question that those in favor of the proposal of the committee say aye, to the contrary nay. The nays have it. So it stands part of the bill. Clause 4 stands part of the bill.
Clause 5?
The entire clause? No. In
Clause
the clause,
five?
no, Right Honourable Speaker. Clause 4 has the issue of ICT. That is
No,
clause
that's
4.
a different one.
No. Right Honourable Speaker. This is it.
Where is clause 4?
Right Honourable Speaker. Clause 4. This is ICTs in clause 4C. That one was clause 4A.
That was 4A.
Yes.
Yes.
But you've said the entire clause 4.
No, 4A. That is where we were debating.
The one on hotels.
Yes, the one on hotels. Then you was on 4C. You put your issue on 4C.
Okay. Thank you. Thank you, Right Honourable Speaker.
Chair, I don't know how we are handling that, because I was here and I had you put the question clearly. That clause 4.
No, the amendment was only on 4A.
The amendment failed, but after that, you put the question. And then after the speaker had finished voting, I don't see how now. Because the matter...
I didn't vote.
No, your vote, I think, carried more weight because we
No,
said...
I don't vote. I don't vote. I don't vote.
So, because I saw the minister here, but...
I
Okay, the
don't
results,
vote.
after you declared the results you desired.
For avoidance of doubt, we have resolved 4A, where there was an amendment from the committee. Where Honorable Mehdi has an issue on 4C, please bring it up. Honorable Minister, get out of your phone.
Right Honourable Speaker, when we were reporting, I spoke about the issue of software as an integral part in digitization and the digital transformation of our country. Right Honourable Speaker, classifying software as a service by amendment of the Principal Act would be heavily detrimental in this way. And I clearly stated it. I stated some of the facts. Just like one of our honorable colleagues clearly stated, that the impact is felt mainly by the consumer. The consumers of software are primarily, basically you and the small startups. Technology is like a human chain.
What is your amendment on FOSI?
My proposal, Right Honorable Speaker, is that we leave the status quo as it is so that we delete the entire clause. That's 4C. So that we delete 4C and 4D for imported software.
Yes.
I want to believe that the Honorable has a point, and what the ministry was trying to cure is a challenge that is at importation, but they are trying to cure it with the VAT law. The general interpretative rules of the harmonized system specifically deal with an item which comes in a composite as a composite good, and basing on the Rule 3B, such items are classified on the material that gives the goods the essential character. So our attempt to tackle this matter in a VAT law might actually bring a legal conflict with the customs law. So I want to request the minister that on this one, to avoid controversy, we actually deal with it at importation. If you bring, let me demonstrate, if you bring this item as a hardware worth 10 million, but on this hardware there is software worth 100 million, the essential character of this gadget moves away from a hardware. And therefore this challenge should be handled at importation rather than bringing this law here. I beg to sub.
Minister.
Madam Chair, I agree with the Honorable Sereko, and also justified, as Katesh has justified, I therefore concede that C be dropped. C
and D. D is consequential. I put a question that clause 4, C and D be deleted. Those in favor say on the contrary nay. As proposed by Honorable Sereko. Those in favor say on the contrary nay. The ayes have it. I now put a question on clause 4. That I put a question that clause 4 be amended as proposed. Those in favor say on the contrary nay. The ayes have it.
Clause 4 as amended.
I put a question that clause 4 as amended stands part of the bill. Those in favor say on the contrary nay. The ayes have it.
Clause 5.
Clause 5. I put a question that clause 5 stands part.
Madam Speaker, when we were debating, had indicated that this power that the minister. So my proposal would be that we delete clause 5 so that Parliament retains the power.
Chair, just for clarity.
Honorable Minister, the fact that we have that in the law already, why don't we have this deleted?
Chair.
You use your powers of regulations. Let's have this deleted. Because it is already specified anyway. It is already in the law. Honourable Minister. We leave it as it is. We leave it as it is. Honourable members, I put a question that clause 5 stands part of the bill. Those in favour say and the contrary nay. The ayes have it.
Clause 6.
Clause 6, I put a question that clause 6 stands part of the bill. Those in favour say and the contrary nay. The ayes have it.
Clause 7.
I put a question that clause 7 stands part of the bill. Those in favour say and the contrary nay. The ayes have it.
Clause 8.
I put a question that clause 8 stands part of the bill. Those in favour say and the contrary nay. The ayes have it.
Clause 9.
I put a question that clause 9 stands part of the bill. Those in favour say and the contrary nay. The ayes have it.
Title.
I put a question that the title stands part of the bill. Those in favour say and the contrary nay. The ayes have it.
Motion for resumption of the
Honourable
House.
Minister.
Madam Chair, I beg to move a motion for the House to resume and the Committee of the Whole House reports thereto.
I put a question that the House resumes and the Committee of the Whole House reports thereto. Those in favour say and the contrary nay. The ayes have it.
Report of the Committee of the Whole House.
Honourable Minister.
Right Honourable Speaker, I beg to report that the Committee of the Whole House has considered the bill entitled the Value Added Tax Amendment Bill 2026 and passed it with amendments.
Motion for adoption of the report of the Committee of the Whole House.
Honourable Minister.
Madam Speaker, I beg to move a motion that the report from the Committee of the Whole House be adopted.
I put a question that the House, that the report of the Committee of the Whole House be adopted by this House. Those in favour say and the contrary nay. The ayes have it.
Bill's third reading, the Value Added Tax Amendment Bill 2026.
Honourable Minister.
Right Honourable Speaker, I beg to move a motion that the bill entitled the Value Added Tax Amendment Bill 2026 be read for the third time and do pass.
I put a question that the Value Added Tax Amendment Bill 2026 be read the third time and do pass. Those in favour say and the contrary nay. The ayes have it.
A bill for an act titled the Value Added Tax Amendment Act 2026.
Title settled and the bill passed. Thank you. Next item.
Bill's second reading, the Excise Duty Amendment Bill 2026.
Honorable members, pursuant to Rule 136 of the Rules of Procedure, I will invite the Minister to move a motion on the second reading of the bill.
Right Honorable Speaker and colleagues, I beg to move a motion that the bill entitled the Excise Duty Amendment Bill 2026 be read for the second time.
Seconded. Honorable Boa, Honorable Adoa, Honorable Alanyo, Honorable Mara, the whole side. And then Honorable Komakech, my whip of DP, Honorable Sailo, Honorable Mbali Kodi. Speak to your bill.
Right Honorable Speaker, the proposed amendments in the bill are intended to enhance revenue mobilization, strengthen compliance, and align the excise duty regime to broader economic, public health, and environmental policy objectives. Briefly, this is the justification for the bill, and Madam Speaker, I want to my prayers are that the House considers and passes this bill into law. Thank you.
Thank you. The chairman is ready to report. And chairman, could you report? And do you have a minority report?
Right Honorable Speaker and colleagues, the Excise Duty Amendment Bill 2026 was laid for the first time in the House on the 1st of April 2026 and was forwarded to the Committee for Consideration, and the committee is ready to report. We looked at the object of the bill, the methodology, the meetings with the public and other stakeholders. And for the record, I would like to mention that we met the Ministry of Finance, Planning and Economic Development, the Uganda Revenue Authority, PricewaterhouseCoopers, the Institute of Certified Public Accountants of Uganda, the private sector, Tax Justice Alliance Uganda, the Civil Society Budget Advocacy Group, then Uganda Alcohol Policy Alliance, the Uganda National Traders Alliance, the Uganda Manufacturers, the Kampala City Traders Association, CACITA, the Uganda Insurers Association, the Uganda Bankers Association, the MTN Uganda, Federation of Small and Medium-Sized Enterprises, and the Uganda Tobacco Taxation Coalition. Documents were reviewed, and observations and recommendations of the committee are here below. Increase on excise duty on any other undenatured spirits. Under Clause 2A of the bill proposes an amendment to Schedule 2 of the Excise Duty Act under Item 3C2 by increasing the excise duty on imported undenatured spirits with alcohol strength by volume of less than 80%. The proposed amendment seeks to increase the excise duty from 80% or 1,700 per litre, whichever is higher, to 80% or 3,500 Uganda shillings per litre, whichever is higher. The committee was informed by the ministry that the amendment seeks to discourage importation of relatively cheap spirits which compete with locally produced alternatives. It also aims to support domestic manufacturers by creating a level competitive environment. The measure is expected to increase government revenue by raising the effective tax collection on the imported alcohol beverage as they have relatively inelastic demand and are consumed mostly by the wealthy. The committee observed that 1. The proposed amendment aims to increase excise duty by Uganda shillings 1,800 on imported and denatured spirits whose alcohol strength by volume is less than 80%. 2, the amendment will make locally produced and denatured spirits competitive. And 3, there is need for government to establish a joint government-private sector task force on illicit alcohol with a focus on upstream supply chain enforcement, coordinated multi-agency enforcement, consumer awareness on health risks, and legislative review of the regulatory gaps. This will go a long way to combating production of illicit alcohol. And therefore, the committee recommends that Clause 2A of the bill be adopted. Adjusting excise duty rates on cement, adhesives, grout, white cement, or lime. Clause 2B of the bill proposes an amendment to Schedule 2 of the Excise Duty Act to increase excise duty on cement, adhesives, grout, white cement, and lime from 500 shillings per 50 kg to 1,000 shillings per 50 kg. The ministry indicated that the current rate of 500 per 50 kg has remained unchanged since 2015. Over time, inflation and rising market prices have reduced the real value of this tax, limiting its effectiveness. The proposed increase of 500 shillings is modest compared to the current market price of the cement and is therefore not expected to significantly affect the construction costs. The committee observed that a gradual increase of 250 shillings per 50 kg as opposed to the 500 represents a modest 50% rise after 11 years of no adjustment, striking a balance between revenue and affordability. The committee therefore recommends that Clause 2B be adopted with a proposed amendment of Uganda shillings 750 per 50 kg. Increase of tax on motor spirit, gasoline, gas oil, automotive lights, amber for high-speed engines. Clause 2C of the bill, honorable colleagues, proposes an amendment to item 8A and B of Schedule 2 to increase the tax on motor spirits and gas oil by 200 shillings. The committee was informed by the Ministry of Finance that fuel pump prices currently average about 5,400 shillings per litre. The proposed increase is therefore relatively small and not expected to significantly affect overall fuel prices beyond the tax adjustments itself. The rationale for this amendment is to maintain the real value of excise duty by accumulating for inflation. The committee observed that with the interventions of the Uganda National Oil Company, UNOC, purchasing fuel directly from the oil-producing companies through the vital Bahrain EC will cushion the impact of the proposed increase in the tax. The committee therefore recommends that Clause 2C of the bill be adopted. Increase of tax on cane and beet sugar and chemically pure sucrose in solid form. Clause 3B of the bill provides that item 9 of the second schedule to the Act be amended to increase the tax on cane or beet sugar and chemically pure sucrose in solid form from 100 shillings per kilogram to 300 shillings per kilogram. The ministry stated that the rate has remained unchanged since 2015. Over time, inflation and rising sugar prices have reduced the real value for this tax, limiting its contribution to government revenue. The proposed increase seeks to restore the value of the tax so that it remains effective and relevant under the current market conditions. The amendment has two main objectives. First, it is intended to increase government revenue in a simple and efficient way by taxing the wide consumed product. And secondly, it supports public health goal by discouraging excessive sugar consumption, which is linked to diet-related illness such as diabetes and obesity. The committee observed that 1. The effect of the proposed tax is to increase the tax on cane and beet sugar and chemically pure sucrose in solid form by shillings 200 per kilogram. Honorable colleagues, the committee is saying instead of 300, why don't we increase by 200 per kilogram? And 2, adjusting the duty to 200 shillings per kilogram as opposed to 300 kilograms represents a reasonable measure to account for inflation and restore the real value for tax. The committee therefore recommends that clause 2D be adopted with the proposed amendments of an increase of 200 shillings per kilogram. Excise duty on plastics. Clause 2C of the bill proposes an amendment to item 11, the second schedule, by changing the parameters for plastics. The current provision had specified the type of plastics under codes. These codes have been removed under the proposed provision. The proposal also seeks to tax disposable plastic cups, lids, plates, cutlery, bags, sachets, bottles, straws, and stirrers, whatever it is. Cling films and wraps, jars, and lids. The rate of tax has changed from $70 to $1,500 per ton. The ministry indicates that the proposed amendment expands the scope to cover most single-use plastics, which are a major source of environmental pollution. These materials contribute to waste accumulation and have been linked to floods, particularly in urban areas such as Kampala. The proposal also harmonizes Uganda's tax treatment of plastics with other EAC countries by applying a higher and more consistent rate across major plastic pollutants. The rationale is to discourage the use of non-essential and single-use plastics while protecting critical uses. By increasing the cost of these products, the measure encourages more sustainable alternatives, reducing environmental damage, and supports responsible consumption. At the same time, it strengthens revenue collection and improves clarity in the taxation of plastic products. The committee observed, 1. The amendment intends to promote environmental conservation by targeting single-use plastics, given that they are an environmental hazard. And 2, the amendment does not cover plastic products and granules. 3, manufacturers who recycle plastics need to be incentivized by provided they meet recycling standards and verification requirements. The committee therefore recommends that clause 2C of the bill be adopted with the proposed amendment to include plastic products and granules under the description in item 11A. Increase of excise duty on cooking oil and introduction of excise duty on cooking fat. Clause 2F of the bill intends to increase excise duty on cooking oil from 200 shillings per litre to 400 shillings per litre. The Ministry of Finance stated that the amendment is intended to increase the government revenue by updating the duty rate to reflect current market prices and consumption levels. The existing rate has become less effective over time due to inflation and changes in the market. In addition, the measure may have public health benefits because of increasing the cost of cooking oil and discouraging excessive consumption, which is associated with non-communicable diseases. Relatedly, Clause 2B of the bill proposes an insertion of a new item 29 to provide for cooking fat. The Finance Ministry informed the committee that the cooking fat, the main objective is to broaden the tax base and improve revenue collection by bringing cooking fat into the excise duty framework. Cooking fat is closely related to cooking oil, yet it has been treated differently for tax purposes. This has created opportunities for tax avoidance, and some manufacturers misclassifying cooking oil as cooking fat to benefit from low taxes. The amendment closes this gap and promotes fairness in taxation. The measure is also expected to improve compliance by making it easier to tax products that are widely used and difficult to monitor directly. In addition, the proposal may have public health benefits. Higher taxes on cooking fat can discourage excessive consumption, which is linked to diet-related illnesses such as obesity and heart diseases. The committee observed the amendment is intended to adjust the duty of cooking oil in Uganda shillings 400 per litre as opposed to 200 per litre, which represents a reasonable measure to account for inflation and restore the real value of tax. Cooking fat and cooking oil are functionally similar products, yet the differential tax treatment has created opportunities for revenue leakages through misclassification by some manufacturers. And 3, bringing cooking fat under the excise duty regime will promote fairness and equity in taxation of edible oils and fat, ensuring that similar products face comparable tax. And 4, the proposed measure may contribute to public health objectives by increasing the cost of cooking fat, thereby discouraging excessive consumption, which is associated with non-communicable diseases. And 5, why the amendment is necessary to close the existing gap, implementation should be accompanied by clear guidelines distinguishing cooking oil from cooking fat to avoid unintended disputes and compliance burdens on legitimate manufacturers. The committee therefore recommends that Clause 2F of the bill be adopted. Registration of motorcycles. Clause 2G of the bill seeks to increase excise duty on motorcycles at first registration from 200,000 to 500,000. According to Finance Ministry, the amendment is intended to increase government revenue by capturing more value from the rapidly growing sector. Motorcycle use has expanded significantly, especially in urban areas such as Kampala, making it an important and reliable tax base. In addition, this duty is often the main point of taxation for motorcycle operators, particularly border riders, who may not be easily reachable through income tax. It therefore serves as a practical proxy for taxing this segment of the economy. The committee observed that imposing excise duty at a point of first registration ensures the revenue is effectively collected from this growing segment of the economy. The committee recommends that Clause 2G be adopted. Introduction of excise duty on paint, varnishes, and lacquers. Clause 2H of the bill proposes to introduce excise duty for paints. Locally manufactured paints, varnishes, lacquers will be charged 3% or 50 shillings per litre or kilogram, whichever is higher. And imported paints, varnishes, and lacquers, will be charged 10% or 2,000 shillings per litre or per kilogram, whichever is higher. The Ministry of Finance informed the committee that the construction sector is one of the fast growing in Uganda, contributing about 5.5% to the GDP. But its contribution is less than 2.7% to the total revenue collected. The proposed tax uses paint and related products as a proxy to capture revenue from this sector. The measure is also intended to improve compliance. Under declaration of products and sales is common in the sector, making direct taxation difficult. By taxing key inputs such as paint, government can collect revenue more efficiently. The committee observed, 1, introduction of excise duty on paints, varnishes and lacquers will broaden the tax base and generate additional revenue from the rapid expanding construction industry. And 2, to protect local manufacturers, a lower rate shall be applied to the locally produced paints, varnishes and lacquers compared to imported ones. Differential taxation will encourage local production, support job creation and value addition in the paints and coating subsector. The committee recommends that Clause 2H of the bill be adopted. In conclusion, Right Honourable Speaker and colleagues, the committee recommends that the Excise Duty Amendment Bill 2026 be passed subject to the proposed amendment. I hereby submit.
Thank you, Honourable Chair. Honourable Ibra.
Thank you very much, Right Honourable Speaker. This is the minority report signed by myself, the Honourable Geoffrey Ekanya, the Honourable Nabukera Hanifa, the Honourable Anna Adeke, the Honourable Brenda Nabukenya, and Honourable Karim Masaba. Madam Speaker, the object as stated of the bill is to amend the Excise Duty Act to revise the rates of excise duty on certain excisable goods and services under Schedule 2 to this Act. The primary problem with this bill is that it targets goods such as sugar, cooking oil, cement, and petroleum that are essential and directly affect the lives of the ordinary people on whose behalf we sit in this parliament. The new tax proposals have the effect of increasing the cost of living exponentially, already troubled by the effects of the war in the Middle East. The proposals will also increase the cost of doing business, thereby affecting employment and making Ugandan goods expensive in the regional market. And the bill is not even complying with the Public Finance Management Act. And it comes at a time when there is no comprehensive tax policy in place as per the May 5th, 2022 resolution of this House. And I'll start with the comprehensive taxation policy. Madam Speaker, those of us who signed the minority report, just want to echo the concerns of the House expressed during consideration of a motion moved by Honourable Javira Semwanga on May 5th, urging this lazy NRM government to immediately formulate and table a comprehensive tax policy.
Asking what?
This lazy NRM government. I am reading a report. If you have problems, it will be after.
Parliamentary language, Ibra.
Madam Speaker, this is a report signed by...
Actually, the person who signed that report is also unparliamentary.
But, Madam, I don't want to begin debating a report I have not
Our
read.
children are watching us, and they're wondering which kind of parliament is that. Anyway, government will respond to you, but it is improper.
Madam, I don't want to begin debating a report as I present. But the fact that a private member was now the one concerned with the existence of a comprehensive tax. Okay, this hard-working government, we can change it to say hard-working government. Honourable Javira, urging this hard-working NRM government to immediately formulate and table a comprehensive tax policy. We are legislating in a policy vacuum. The Javira motion was passed on May 5th. Unfortunately, Honorable Speaker, up to now, this government, hard-working government, every financial year introduces tax bills without a taxation policy in place. This approach, Honorable Speaker, allows government to engage in speculation and guesswork while originating and imposing taxes. This leads to unfair taxation that disproportionately burden the already impoverished citizens. The Honorable Kate Shumba, former Commissioner for Domestic Taxes at Uganda Revenue Authority, emphasized the necessity of making tax decisions in accordance with a clearly defined policy framework. In his words, we need to base our tax decisions on a structured policy rather than relying on ad hoc negotiations. But like many NRM MPs, he has signed the majority report urging government to tax citizens without the existence of a policy. While launching the Domestic Revenue Mobilization Strategy 2019-2020, 2023-2024, the Finance Minister, Honorable Matia Kasaija, who first became a minister in 1980, said, in order to achieve our revenue potential, we will move away from ad hoc annual tax policy changes. These piecemeal adjustments with little alignment to overreaching strategy have created a high degree of unpredictability and uncertainty in our tax direction. The Domestic Revenue Mobilization Strategy will address this as well as ensure that our tax policy embodies the principles of simplicity, fairness, citizen welfare, and sustainability. Going forward, the Honorable Matia Kasaija said, we will involve taxpayers more and fully in the tax policy formulation process, restoring ownership and public confidence in the tax system.
Thank you, Right Honourable Speaker. I thank my honourable colleague for a well-detailed minority report. But looking at what we have on our schedule today, I was thinking if the honourable member could just go on the areas of contention to save us time, instead of going through all this reading, so that we can proceed with other items on the agenda. Thank you.
Honorable Ibra. Finish. In the subsequent one, we should be looking at the areas of dissent. I'll let him finish his report.
I think the Honorable Isaac has
but whether you want it, we have to finish. Finish, do it.
Because this is a 2-page report. And at this stage, we are dealing with the policy generally. The specific issues are in the committee stage. So the Madam Speaker, the Domestic Revenue Mobilization Policy, the Honorable Matia Kasaija said, will ensure that our future tax policy embodies the principles of simplicity, fairness, citizen welfare, and sustainability. Going forward, he said we will involve taxpayers more and fully in the tax policy formulation process, restoring ownership and public confidence in the tax system. Honorable Kasaija also said future resource mobilization efforts depend on Ugandans perceiving a close link between taxes paid and services enjoyed. He spoke about fiscal and social contract and efforts to stamp out corruption. I didn't know that the same Honorable Kasaija will continue leading a team of economists that think in installments as these continued piecemeal annual tax proposals suggest. Let Honorable Speaker, in the absence of such a comprehensive taxation policy to date, we are urging this Parliament to reject these tax proposals that are framed to exploit citizens in order to raise money to fund main luxury. And for every proposal that you adopt, please know there are people you are likely to render unemployed. The World Bank in its July Uganda Human Capital Development and Growth Review spoke about impact of taxation on employment. And I quote, over 90% of farms in Uganda are macro and informal, consisting mostly of self-employed household enterprises. While 28% of adults own or co-own a new business, Uganda also has some of the highest business discontinuation rates in the world. Factors contributing to this include high tax rates, corruption, and low human capital among both owners and their workers. Both World Bank and National Planning Authority report that of every 4 businesses started in Uganda, 3, which is 75%, will die before their 5th anniversary because of the high cost of credit and because of taxation. Revenue mobilization goals and targets must not conflict with the broader socio-economic objective of any country. That's our advice to the hard-working NRM government and its newly commissioned Chankwan's graduates. Uganda Manufacturers Association appeared before the committee and said they were never consulted. They said we will be consulting. They warned against the overtaxation of essential goods. They informed the committee that annually they produce about 800,000 metric tons of sugar, but only half is consumed in the country. You're going to make consumption of sugar by our ordinary people difficult and exporting the same sugar unattractive. Manufacturers are speaking about stocks in their warehouses. Madam Speaker, we are opposed to the 200 shilling that government seeks to impose an increase on petroleum. This section also addresses cement, adhesive, grout, white cement, and lime. Honorable Speaker, the demand for gasoline and oil is inelastic. That means that any increment in tax on any of the above will rest on the final consumer. Excise duty is an indirect tax imposed on specific goods manufactured locally or imported, and is typically embedded in the price by the final consumer. Fuel prices are already high and are expected to increase further as a result of the geopolitical tensions in the Middle East. Since energy drives other activities, the cost of doing business in Uganda will become high and difficult to contain. As of this morning, pump price has hit 5,500 per litre. The IMF and World Bank have said that even if the war in the Middle East stops and freedom of navigation restored, it will take a whole year for oil prices to stabilize because refineries bombed may take years to repair. There is some lousy argument by some NRM functionaries that Uganda is safe because it buys oil from so and so. Even that so and so will or has already raised the prices because of the war. Let us not behave as if Chankwan's is heaven. We will still live on earth. The Institute of Certified Public Accountants of Uganda advised that if government must increase oil prices, it must be purposes of addressing inflation that may have eroded the value in the last 1 year. That's why they said apply an inflationary increase of shillings 50 per litre. You increase petrol to 1,600 and diesel to 1,280. Doing otherwise will make production costs surge, which will lead to price hikes across various goods. Honorable Isaac, I'm on the last page. We recommend that...
Honorable Isaac is in his last page of his tabloids story. Actually, when I go home, my son tells me those kind of stories. You see, you know, that's a tabloid story. Please finish.
We recommend that the proposal be dropped or repealed and the current excise duty maintained as they are already high at 1,550 per litre. In fact, if you read the huge volumes of the draft estimates brought here, payee is followed by petroleum in terms of raising revenue, about more than 4 trillion already. We reject the proposal to increase tax of 1,000 per 50 kilogram on cement, adhesive, grout, wet cement, or lime. This will slow down the construction sector, a major employer. It has become a practice to increase taxes on the above every financial year. In 2024, government increased taxes on cement, grout, and lime. First, with the housing deficit in the country, one would be expecting government to promote housing construction through reductions in prices of building materials, like we are doing on hotels earlier. Government cannot talk of promoting decent and affordable housing while at the same time increasing taxes on building materials. Government wants everything at the same time, raising taxes, and they also want decent housing. Let government choose one, decent housing, then reduce taxes on building materials. You want more revenue, then increase your taxes, but don't mind about the plight of citizens. Remember, this sector has been targeted in the recent times. Already rental taxes are affecting investment in the sector. Honorable Speaker and members, be reminded that this method of introducing multiple taxation and increasing existing ones triggered widespread resistance in Kenya, leading to chaos. Let government be mindful of introducing multiple new taxes that directly affect everyday life. Finally, reconsider motorcycle when you are dealing with the excise duty. To impose excise duty of 500,000 from 200 will increase the cost of motorcycle acquisition and limit business expansion. Would rather ask government to at least maintain 200,000. The intention is to protect the many youth and informal sector livelihood. Honorable Speaker and members, we should learn something from the Kenyan experience that demonstrated that debt-driven taxation must be handled with extreme care. When citizens perceive that they are bearing the cost of fiscal imbalance through higher living expenses and reduced economic opportunity, resistance can quickly emerge. Right, Honorable Speaker, that's where our report ends. Thank you very much.
Thank you, Honorable. Honorable members, you've had the report of both the major report and the minority. Silo, you have something to say?
Yeah, Right Honorable Speaker and Chair of the committee, this is an opportunity for us to speak for the people. How I wish everybody was actually in the house, because this is the time that really matters most. Starting with the issue of hiking prices on fuel. Right Honorable Chair, I do not agree with the committee. I do not agree with the minister. I agree with the minority report. The issue is that at this time we are talking about what is happening in the Strait of Hormuz. All of us watch TV when we go back. The moment Trump says we are not going to have peace talks, prices go up. When he changes his mind, something stabilizes a little. For how long shall we have that kind of thinking where we don't think about the current situation in the world? I thought that when we are discussing about the policy of tax, we look at the situations generally. Right, Honorable Speaker, away from that one, the issue of cement, come to my constituents and see the need for people to construct decent housing. How can we on earth think we should levy more on cement, grout, adhesive, and the rest? Instead, at this time, we will be talking of removing taxes on cement so that we boost construction, but also there is a big marriage between construction industry and tourism. Last time you were telling us that you want to boost the tourism. How can you boost it when you're increasing taxes on cement? I think it doesn't work like that. Right, Honorable Speaker, the last one. When we talk about the issue of taxing plastics, for me that is okay, because we want to discourage. Let us look for alternatives, but we cannot be seen to be the ones actually in this house to tax the other ones that I've talked about. Eliminate the tax on fuel, eliminate the tax on cement, there we will agree. Thank you so much.
Thank you, Connie. Procedure.
Thank you, Right Honorable
There's
Speaker.
Procedure, Isaac.
Actually, it was a motion, Madam Speaker. The motion is that if we can proceed to the committee stage so that we look at this item clause by clause, it will also give us an opportunity to debate on it and put our points across to support whatever clause we are we want to change. Thank you.
Members, there is a motion that there's a motion on the floor.
I want to oppose the motion. Firstly, Right Honourable Speaker.
The motion is not even seconded.
There seem to be no seconders.
No, I haven't asked for secondment. Let me, for procedure, let me just finish, then I give you to. Members, do you second that motion that as seconded by Omara, by Amos, by Musasizi, Gabriel, Isaac, Dr. Emily. What Honorable Isaac, you justify your motion.
Thank you, Right Honourable Speaker. Right Honourable Speaker, when we move in the committee stage, we look into detail, clause by clause of this matter. It still gives us an opportunity to amend accordingly, if so we wish, and do the same issues that we are doing now, debate and putting points on what the issue is. But at least there it will have an effect that it will be adapted or amended, or we stand on by it.
Honorable Ogon, like you've spoken about cement now. When we are in that clause of cement, we debate exhaustively and agree or disagree. That's what Honorable Isaac is talking about. But let me first hear from my good Lob. No, let me hear the Lob. Lob is Lob.
Right Honourable Speaker, today we are really being taken at a terrific speed. So there was a suspension of rules to say, let's not...
Now,
I'm giving a generic...
After calling you my good Lob.
Then let me show you that I am bad.
Lob.
But let me make this statement, Right Honourable Speaker.
Lob, if you're not in agreement with what he has said, it is okay. We can debate. I don't have a problem with that. I can tell you I have all the time. We are here. Even if up to midnight, we are here. Members, let's debate.
We are here.
Let's debate. Debate.
I thank you for conceding to our insistence that we get to debate a bit of the principles. Because you see, Right Honourable Speaker, there's a reason why the two processes are provided for. The debate of the general principles, then committee stage. By the way, at committee stage, the rules don't allow us to debate.
Con was on the floor. So, Connie.
Oh, you don't want me to finish what I was saying, Right Honourable?
No, now we are saying we are debating.
Okay, I'll come back.
Yeah, Connie.
Thank you, Right Honourable Speaker. Right Honourable Speaker, I want to thank both committees for their reports. Yes. However, maybe I will support the minority report, where not maybe entirely, but I would rather say, Right Honourable Speaker, what has been put forward is what affects the lowest person. Whatever concerns the low person, it's of late that people have begun to build. And now if the cost of cement is going up, then they will never build at all. We'll get back to mud and water and timber, which is also outdated, given the fact that we are moving to a middle income status as a nation. Right Honourable Speaker, it's going to be very outdated for us to get back to that. Second, Right Honourable Speaker, leaving the building materials apart, when we get to cooking oil, which affects...
First of all, how much is cement now?
35.
Depending on the gauge.
35,000.
Depending on the gauge.
Yeah.
There is semi 1, semi 2. They differ. So we are looking at if it is 35, then it will go to 36. Not so.
No, it is per kilo. It's per kilo.
A kilo of 50.
Yeah. Per 50 kilogram.
Yes.
Yes.
Okay.
Right Honorable Speaker, it's evident that right now people who are involved in very small businesses are the youth and the women who basically base on baking. And that is maybe making chapatis, mandazis, and they are really surviving through that. Now, if cooking oil is again hiked, Right Honorable Speaker, we are going to have a lot of unemployment and the crime rate is going to rise. Secondly, they've also destabilized them and now they are trying to look for cooking within their homes and then move around with these products, which are being consumed by people who move up and down every other day. If we do that, Right Honorable Speaker, we'll be depriving them of the rights. And Right Honorable Speaker, thirdly, the cheapest means of transport in this country is border, where many times I inclusive use border, especially when we are caught up in jam. Now, if a border will not, first of all, they are struggling with the 200,000. Now, if we hike it to 500,000, aren't we rendering them jobless? Yet unemployment is on the rise. And our youth are basically involved in that kind of transport sector. Right Honorable Speaker, let the 200 remain other than getting it to 500,000. I want to thank you.
I want whoever is giving a submission, the fact is we must raise money. These people want good roads, want hospitals, want what? Now, if you're saying, if we are talking about cement, we are saying, okay, this would be an ideal position. You get it, eh? A middle ground. This would be the middle ground. We cannot say forever that this is, we are not static. Eh? You give your suggestion and say, as me I would suggest, A, B, C, D, and that is what would be. It would help us in our debate.
Thank you, Right Honorable Speaker. Right Honorable Speaker, it has been at 200,000 and they've been struggling. Can we try to put it at 250?
Okay.
250.
And then the cement?
The cement, maybe...
No, you cannot say zero when you are the same people complaining of bad roads. You are the same people complaining no hospitals. You are the same people. No, you leave Connie. You are not his assistant. Connie.
Right Honorable Speaker, like you've already.
What is the procedure about? He's a member of parliament of Mitoma. And he has just come to tell me he loves me. And that is that, period.
There are standard procedures here of receiving the speaker or deputy. But just
that
for
is
the
a member
deputy
of
speaker
parliament.
to sneak in like that.
He came as a member of parliament. And I'm happy that he came. Join me in clapping our hands for him to come. Yeah. Mama, thank you for coming, Honorable Thomas. Yes, Eki.
Madam Speaker.
Tororo cement.
Yes, the issue of cement is very serious. Because we are very lucky to be in Tororo, and we need to find out why that Tororo has 3 cement plants, the biggest in this country. The reason is that Tororo is a hub for distributing cement to Sudan, to Kenya, to Kampala, and to DRC. If we increase this tax, Madam Speaker, our cement is exported to DRC. As we talk today, Rwanda had the cement plants that were almost out of production. The 2 cement plants have now emerged, and they are producing cement in big quantity and competing with us for the market in DRC. it is going to have serious impact. The tax you are proposing to collect, you will lose it. Because now export market, more than 50% of cement produced here is sold in DRC. Secondly, sugar. As we talk now, Madam Speaker, sugar employs more than 80,000 young people. And we need to find out, Madam Speaker, why we have sugar export majorly to DRC. But as we talk now, because of geopolitical reason, Tanzania, Rwanda, and Burundi are bringing sugar from Brazil, and the sugar is rebagged as East African sugar and is entering DRC. Honorable Minister, you need to do complete research when you want to introduce tax. Look at the region. You increase the tax on sugar, you are going to allow sugar from other regions entering DRC and will not have market for our sugar. And therefore, Madam Speaker, second to issue of border. Many young people who would be collaborating people in town are in the border industry. By increasing tax of 500,000, you are going to increase thuggery in this town, and many young people will be unemployed.
Madam Speaker.
Yes, Senior Youth.
Thank you, Right Honourable Speaker. Madam Speaker, when we enact our rules here, they are intended to protect us and save our time. Our good member of parliament here is a member of the Committee of Finance. And I imagine that during the course of the debate in the committee, we received the same, but the majority took the day. Madam Speaker, wouldn't it be procedurally right you guide on whether the member is proceeding well to take us through the debate again, and yet he had the same prior? Thank you, Madam Speaker.
Honourable members, we are now having a committee of the whole House. We are having a committee of the whole House. So, members, Lob, can I complete with you?
I conclude. Madam Chair, I therefore want to request you to exercise restraint because of the fuel price. It already has a trigger in all the products, all across. In fact, your friend, Madam Chair, Ruto, William Ruto, the President of Kenya, His Excellency, has reduced the price, the taxes, and even procuring financing from the international lenders.
Our prices for fuel here are lower than Kenya. Kenya is 70 shillings. Time 30.
Madam Chair, you have a point, but ours is temporary.
The good thing you say, my friend, His Excellency Ruto. So just know that we are in touch.
Yes, thank you very much. I know, and you used to delegate me to deliver your messages. Madam Chair, yes, that is a fact. Madam Chair, our situation here is going to worsen because as we speak today, most of the petrol stations are drying out. And therefore, I would urge government, I know the people, you are now in power of the election, that this short period, we need to reconsider the taxes we are introducing. And the last one on cooking oil, we are likely to have cooking oil that is contaminated to be released in the market. And that will increase the health cost. I therefore want to make a proposal for us to raise revenue, Madam Chair, that there are certain areas we can raise revenue from. For example, we tax brand new cars. Because these are cars of people who have money. We increase the tax on it, and therefore we shall be able to collect more money. Number two, in some countries within Africa, like hotels, people go to hotels. They will buy beer there at 20,000 shilling a liter, a bottle. You drink a bottle of soda, 10,000. We increase the tax in those hotels.
On beer, sir?
Yes, on beer sold in Sheraton and Serena. We will be able to cushion the gap because we need money. But finally, so I want to thank you very much, Madam.
Lob.
Honourable Speaker, one, you see, this Parliament keeps being taken for granted. On an annual basis, we have been reminding the executive about the comprehensive taxation policy on an annual basis. We were here last year insisting on the same matter. Honorable Musasizi told us that it is going to come, that comprehensive taxation policy. I stood and insisted and I said, can we have a timeline on this? The Honorable Henry Musasizi from Rwanda, Minister of State for Finance General Duties, stood on this microphone and told us that by the end of 2025, the taxation policy is going to be brought here in this House. So that by the time we get into the next fiscal year budget process, we shall have that taxation policy. You promised here on the Hansard. We are now in 2026, coming to the end of April. Did you tell us a lie? What happened? Maybe he encountered some challenges. We need to know, because a taxation policy sets for you the foundation that will then inform you what taxes to increase, what taxes to reduce, what to do away with, etc., etc. Otherwise, we keep gambling. Now let's increase taxes on building materials. You don't know the ripple effect that's going to have. We are trying to fight out with, inadequate housing. You're making it even harder. Then you increase on fuel and all of these different things. What is informing the decisions Minister of Finance is taking, and therefore bringing to this House to take us alongside them? So we need an update on the promise that was made here, that by the end of 2025, the taxation policy would be here. Otherwise, I am concluding that the Minister of Finance was telling us a lie. Finally, Right Honourable Speaker, with specificity to the 200 shillings that government wants to increase as a tax on fuel, the chairman of the report gave us feedback that the Ministry of Finance told the committee that this 200 shillings increment is not problematic. It's not going to have so much of a burdensome effect. That's the feedback the chairman gave us, as told to him and the committee by the Ministry of Finance. This is not true. You see, the thing about fuel, however slight the increment is, there will be a ripple effect on all goods and services. That's just the way it is. Artificially, by the way. It might appear small, 200 shillings. But people will go to purchase clothes and they'll tell them, the prices of fuel went up. They'll go to purchase food, the prices will have shot up, and everything will be blamed on an increment on fuel prices. I hope we consider these things. When we are told, okay, so then where will government get the taxes from to build roads and all of these different things? But you also need to establish that now, when you increase this year, it will affect even your ability to collect what you have been collecting, without a doubt. I hope that government thinks through these things. But also, Right Honourable Speaker, the Inspector General of Government has issued a report and told this country that we lose 10 trillion shillings to corruption per year. Can we stop stealing taxpayers' money? Because when you say we don't have money, where should we get the money from? That's why you're increasing taxes on fuel, building materials, and so on. Let's just stop stealing the money that is collected. Because you collect and then you steal. And then you're asking where should it come from. Let's be prudent in using what we collect. And those are not my words. That's the Inspectorate of Government, a government entity. Can we address that theft by government officials, people in government? Because you collect and it is the same government officials who are stealing. And then they will tell the taxpayer, you see, we need to build your roads, hospitals, and so on. But you're stealing the money that should be doing these things. So we need to stop blackmailing the taxpayer to say, we are increasing so that we can avail services to you. Money is not adequate. The money is there. Let's have stopgap measures to stop the grand theft that keeps happening. There's information from the Honourable.
Thank you, the Leader of the Opposition and Madam Speaker. The information I want to give to you is that key stakeholders in this country, including taxpayers who are listed, came and appeared before the committee. Some of them are paid very highly by their companies to give their opinions which they put in writing. Some of them are experts hired. They appeared before the committee. They gave their input, which should have been taken into consideration. But the committee decided to disregard all that information provided by experts touching the matters that are before us, the effect of increase in cement, etc. So I want to inform you that the work of this committee has been brought to us here, disregarded all the efforts that were given to them, and precisely that is the reason why they are in a hurry always to bring. I will take your information. I want to conclude that's the reason why the chairman is even hiding the minutes which he has laid here when he wanted to access, so that I could point to him that these are the stakeholders. He quickly pulled it and put it very far from that side. Now I can receive your information.
Let's have the information.
My brother Wadul today, I think he's spinning things unnecessarily. I would like to give information, Right Honorable Speaker and my colleagues, that the committee received all this information and engaged. It is not true that whatever we receive, we buy in wholesale. We only receive and try to make an adjustment as of necessity. And that's why you see in our proposals, there has been an adjustment on cement, there has been an adjustment on sugar and other adjustments. Why? Because we also consider other issues, not necessarily only the views from the stakeholders. Thank you.
Thank you. Yes, you.
Madam Speaker, thank you for the opportunity. Sitting on this other side of this house, I am filled with pain that whereas our committee gave a wonderful report, the minority report, Madam Chair, feels like a commentary. It divests itself from the real fact that government is faced with a paradox at all times to provide services. Madam Speaker, also we must note that some of the assertions accentuated by our colleague member in the minority report are subjective in nature. They're not comprehensive. For example, Madam Speaker, when we come here and say that, oh, don't raise anything on cement. Yes, it is true. A slight increase on cement would directly increase the cost of construction and pull out players in the sector. However, that, if you consider that alone, you're being subjective. Because if you ask a honorable colleague member who is representing Chira and asked him, what is the direct relationship between the newly constructed roads that are going to Chira division and the rate at which housing units are being put up, you will see that, Madam Speaker, when we supply infrastructure, we enable players in the sector to provide for housing. Therefore, Right Honorable Speaker, we should not be gagged to think that when matters are brought and sensationalized here, we should fear to debate them. Right Honorable Speaker, I want to propose that whereas a member here seeks to sensationalize that increasing a tax on the border or the motorcycle is detrimental, yes, I can take a middle ground and say, yes, we could have a slight increase. But we can also here, because we are policy makers, make firm proposals on how we can formalize the informal sector in the border sector.
Procedure.
So, Madam Speaker and Chair of this committee, our members on the opposite side need to understand that every other time government is faced with the paradox of supplying infrastructure, providing services. These are the ones that actually drive the other sectors that we feel are so important. Thank you very much, Madam Speaker.
Thank you. Honourable members, Kumi municipality that is represented by Honourable Ogon has the best roads, the best roundabout, the best lighting. That does not just come from heaven. we need to do these taxes on a progressive manner. And that's why I was saying we could get a middle ground. We don't have to take everything. Get a middle ground. We grow bit by bit, year by year. I put a question that the Excise Duty Amendment Bill 2026 be read for the second time. Those in favor say and the contrary nay. The ayes have it.
The Excise Duty Amendment Bill 2026, Bills Committee stage.
The Minister moved the motion.
Clause 1.
Clause 1. Karim, do you have an amendment? I put a question that clause 1 stands part of the bill. Those in favor say and the contrary nay. The ayes have it.
Clause 2.
Amendment.
Right Honourable Chair and colleagues, the committee proposes to amend clause 2 as follows. A, in paragraph B, by substituting for item 7 the following: cement, adhesive, grout, white cement or lime, Uganda shillings 750 per kilogram.
Per 50 kilograms.
Yeah, per 50, I beg your pardon. Let me repeat. By substituting item 7 the following: item 7, cement, adhesive, grout, white cement or lime, Uganda shillings 750 per 50 kgs. And B, in paragraph D, by substituting for the proposed item 9 the following: item 9, cane or beet sugar and chemically pure sucrose in solid form, Uganda shillings 200 per kilogram. C, in paragraph E, item 11A, by inserting immediately before the word sacks the words plastic granules and plastic products. Justification: the proposed 1,000 Uganda shillings features a 100% increment from 500 shillings, which is excessive. Uganda shillings 750 per 50 kg is to provide a reasonable gradual increment of 50% from the 500 Uganda shillings to 750 shillings per 50 kgs. 2. The proposed Uganda shillings 300 features a 200% increment from 100 Uganda shillings, which is excessive. Uganda shillings 200 per kg is to provide for reasonable gradual increment of 100% from Uganda shillings 100 per kg. And 3, to include plastic granules and plastic products in the item, and therefore taxable at a rate of 25% or 1,500 per ton, whichever is higher. I beg to submit.
Karim? Ebra?
Madam Chair, my proposal before is to deal with these items one by one. You have petroleum, you have sugar, you have cement. It will be very difficult to take a decision at once on all of them. So my suggestion is that we deal with one at a time. And if that is agreeable, then we... Madam Chair, I also don't want to be a bad man. You have a proposal on cement. Government wants 1,000 per 50 kg. Majority are saying 750. I am proposing a middle ground of 100 shilling and 50. 100 shilling and 50. Yeah. 150.
You want it to become 650?
No.
Remember, it
Yes.
has been 500.
Yes, yeah. Where I want to differ is on petroleum. No, I had asked.
Yes.
Chair, according to our minority and our harmonized position, is that we amend Part 7, which talks about cement, adhesive grout, white cement and lime, and replace it with 650 per 50 kg.
Can we hear from this side?
Thank you, Madam Chair. Madam Chair, I want to propose a middle ground that instead of 1,000, we move to 800. 800.
Chair committee? Because that's not a middle ground. Middle ground is a chair's middle ground.
I would like to affirm, Right Honourable Chair, that the position of the committee was the actual middle ground. When you propose 500 shillings as an increment, and we come up, yes, on cement, and you come up with 250, we think that was a reasonable middle ground.
Thank you. Those in favor of 750 say and the contrary, nay? The ayes have it. Go to the next item, Ibra.
Madam Speaker, there is a proposal of 200 on. We on fuel. That's what follows cement.
On cane or beet sugar?
But you are jumping fuel. The bill has fuel. Yes. It has A and B fuel, where government is proposing a 200 increment. The Institute of Certified Accountants, and I think UMA, they said we can take care of the inflation because 1,550 is not the same this year, and proposed 50. So, Madam Speaker.
So it would go to 16.
Yeah, that's our proposal, because these are experts who said we will now deal with the inflation, but without having to burden the economy, production, transport, etc.
Minister.
And the justification are here.
Minister. Honorable Silo, we debated this report.
Thank
Shall we finish?
Thank you, Madam Chair. Madam Chair, it is true we normally adjust the tax on fuel to take care of inflation. The last adjustment we made was in 2024. Now it is 2 years ago. And that is why 200 shillings is appropriate. And I want to invite colleagues to support our proposal. It will take care of adjusting for inflation. No.
Chair.
And the committee has looked at this. We have provided the justification. And the committee also agrees with our proposal, Madam Chair.
Chair.
Right Honourable Chair and colleagues, the middle ground arrangement that the committee used as an approach gave us an impression that this should be left the way it is proposed. That's why in our report we did not adjust. We also realized that it is a source that would adjust as of necessity the supply need that colleagues are talking about when adjustments are made elsewhere. And that's why the adjustments of reducing on sugar, on cement, are catered for without necessarily affecting the inflation rate that we considered.
I put a question that the change, the proposal on gas oil stands part of the bill. Those in favor say on the contrary, nay. The ayes have it.
We voted on what?
And motor spirit, that's gas oil.
Ours was the first. That
I am on the report. I'm putting a question on the report.
But Madam, you invited me first to make a proposal.
Your minority is part of the report.
But the report has two positions. Have we taken both?
Okay, can I put a question on yours too?
Can I restate it? Just for colleagues. So this is what UMA told us and the Institute of Certified Public Accounts, that to deal with inflation, you move from 1,550 to 1,600 for petrol. And for diesel, you add 50, you go to 1,280. So that's a proposal. And the people who appear before us should also have confidence that we take care of them. Institute of Institute of Certified Public Accountants of Uganda.
Madam Chair.
Yeah, so you wanted experts. It's not my view. They said actually you're going to.
Karim.
And Chair, just to make an addition, every witness we interfaced was against this proposal, and no one supported this increment because it's quite huge given the circumstances that we have a lot of instability going in the Middle East and prices are going up. And they said, since each year we are having this excise duty amended, that can come maybe after a year when things are stable.
They said this one was amended in 2004.
Last year they brought it, this house stood against it because of certain reasons. But as the minority, we've decided to come up with a common position. But the minister does not want to leave his position. Maybe let's look at 100 instead of the 200, because honestly speaking, we need to be sensitive of the fuel prices in the country. And the minister, next time we will have another discussion after we've seen how this war has affected the fuel prices, because we do not know when it's going to end. And our people out there are concerned so much about the fuel prices. So, Right Honourable, the proposal, we are shifting again from the views of the witnesses of 50 to 100 shillings. And I request that the Honourable Minister does concede to this, to have...
Minister, can you give us the implication of that amendment, that proposal on revenue projection? If somebody needs time, what time?
Madam Chair, the implication on revenue, if we pass this proposal to increase tax on diesel and petrol, will give us 450 billion Uganda shillings. So if we don't pass...
That is at 200.
Yes, if we don't pass it, we are forfeiting 450 billion.
So if we pass at 100, that will be half of that.
Madam Speaker, Chair rather, sorry. I want to again appeal to the House that we are in this to look for revenue to finance the budget. So if we lose these proposals, no, yes, because everyone is saying, yes, let's increase. The question is by how much? And how much we are saying, since you agree that we increase, let's increase by 200, because, Madam Speaker, you cannot base, just a minute, Honorable Mafari. You cannot say that what is happening in Iran now can be the basis of our making decisions here, because we don't have a control over them. We don't know when this war will end. You cannot say we cannot legislate because there is war in Iran. What if it moves from Iran and goes somewhere else?
Thank
you. So I think the principle is that fuel prices must adjust to inflation. And we are saying the adjustment is 200. Yes.
Madam Chair, just again to add on what the Minister is putting forward. I want to appreciate this good Parliament.
No,
we moved a great length last year.
Let's have respect for colleagues. I thought, honorable members, I thought I'd already guided that this is a committee of the whole House. He's not debating. He's not debating in the report.
I'm not a member, Madam Chair, and I am adding to supplement on what the Minister has just put forward.
Honorable Silas, you're my OB. I thought we joined it together. Don't be shameless.
Madam Chair, I beg to be protected so that I can move forward. Madam Chair, I would like to add on what the Minister is saying.
Yes.
For sure, an increment of 200 shillings, yes, it has a ripple effect on all our economy. But you also must appreciate that this Parliament moved a great length last year when we passed the act that cushioned our consumers from retail suppliers of gas and what. Therefore, it is with that firm assurance that we should move forward. I know that our consumers have been cautioned, and allow government, because we are also facing the demand that in these 5 years we should move forward greatly and improve our infrastructure. Madam Speaker, I was here and a member noted that you are friends with our great president of a neighboring country, His Excellency. As you can see, recently a statement came out and said they are a middle-income country and we are a lower-income country. We only have 6,000 kilometers of roads and we should move forward. But we cannot move forward if we don't allow some of these monies to be raised and we construct roads. Madam Speaker, thank you very much.
Thank you. Nathan.
Thank you very much, Madam Speaker. Madam Speaker, we can raise money. And I know my brother here knows. Currently in this country, there's a lot of money lying redundant. And it can be good. You see, UR is not sitting on its job. Back duty, if it was implemented, it can be done. Let me give a simple example. Recently, a civil servant or a public officer gave a kid who cannot drive 100 million car or more, 200. And that clearly shows, by the time she did that, she must be having some income, which she is not declaring. Immediately, if this was a developed, if it was maybe Kenya or Tanzania, by now Bakadita would be there to find out what was the source of the money, what have you hidden money. And that person alone shows that he has been stealing public money, which we are not aware. So there is a lot of money. Bakadita, URA should do that. So, Madam Speaker, this one where you're taxing as small people, we must deal with. We are paying taxes. There are a few of us who are paying taxes. We are really.
There's a procedure question. A procedure.
Madam Speaker, in our mode of debate and by our principles here, we need to run away from being subjective in nature. Secondly, to add to this, Madam Speaker, our members on the other side have been arguing that we should have a comprehensive tax policy and putting us at gunpoint. And yet the same members are putting forward very subjective proposals by discussing individual lives. I would like to also inform them that whereas you are proposing such taxes, the cars are the most taxed items here in this country. So when a member of the community, an individual member, buys a car, it means they have gone to length to pay their tax. Madam Speaker, is it procedurally right that a member continues and moves forward to debate individual lives and luxury lives of members, arguing that those are pockets that should be taxed more? I beg to be guided. Subjective.
I am sure Madam Speaker can't even manage to rule on this. Because you're a child of a Professor Lugumai, the gang of four, you would be debating better. I'm saying back duty is whereby you go back and understand how somebody generated a
Honorable Nandala. Recently, it was also my birthday. You should have also bought me a car.
For you know it.
As your girlfriend.
For you know, I bring me. I don't declare I bring mine.
Remember, let's not talk about persons. You get it, eh? I put a question that clause 2 as a I put a question that clause 2 be amended as proposed by the committee. Those in favor say and the contrary nay. The ayes have it.
Clause 2 as amended.
I put a question that clause 2 as amended stands part of the bill. Those in favor say and the contrary nay. The ayes have it.
Chair. Madam Chair, we had said we will go item by item. We dealt with some, but there are also others following sugar and others. I seek clarification.
Excluding granular used in manufacture of multiple use.
Maybe let the minister just, honorable minister, maybe just raise a clarification. Just raise a clarification. So then the detail we can clean up, but just raise as clarification so that we don't have to do a commission.
Kanya, you're over shouting for me. Eki, you sit.
Thank you very much, Madam Chair.
Eki, first sit. Do you know by the time I leave here, I have a headache because of you, Eki?
Madam Chair, we have no strong departure from what the committee is proposing. However, there is something I want to clarify. On the proposal in E under item 11, where the committee is inserting immediately.
He is basically making a clarification.
Before the word sacks, the words plastic granules and plastic products. We want to add, we want to clarify that this should exclude granules used in the manufacture, multiple use products such as water tanks, pipes and plastics for packaging pharmaceutical products and their raw materials.
Title.
I put a question that the title stands part of the bill. Those in favor say on the contrary, nay. The ayes have it.
Motion for resumption of the House.
Honorable Minister.
Right, Honorable Chair.
What we passed is very clear. And that is
Right.
where I put a question.
Right, Honorable Chair.
And that's where I put a question. Resumption. Let's first resume.
Right,
I put
Honorable
on my
Chair,
way.
I beg to move a motion for the House to resume and the Committee of the Whole House reports thereto.
I put a question that the House resumes and the Committee of the Whole House reports thereto. Those in favor say on the contrary, nay. The ayes have it. Members, we can have a working lunch. I am taking my tea here. Yeah.
Report of the Committee of the Whole House.
Honorable Minister.
Right, Honorable Speaker, I beg to report that the committee has considered the bill entitled the Excise Duty Amendment Bill 2026 and passed it with amendments.
Motion for adoption of the report of the Committee of the Whole House.
Honorable Minister.
Madam Speaker, I beg to move a motion that the report from the Committee of the Whole House be adopted.
I put a question that the report of the Committee of the Whole House be adopted by this August House. Those in favor say on the contrary, nay. The ayes have it.
Bill's third reading, the Excise Duty Amendment Bill 2026.
Honorable Minister.
Right, Honorable Speaker, I move a motion that the Excise Duty Amendment Bill 2026 be read for the third time and do pass.
I put a question that the Excise Duty Amendment Bill 2026 be read a third time and do pass. Those in favor say on the contrary, nay. The ayes have it.
A bill for an act titled the Excise Duty Amendment Act 2026.
Title settled and the bill passed.
Item 3.3, Bill second reading, the Tax Procedures Code Amendment Bill 2026.
Pursuant to Rule 136(1) of the Rules of Procedure of Parliament, I now want to invite the Minister of Finance, Planning and Economic Development to move a motion for the second reading of the Tax Procedure Code Amendment Bill 2026. Honorable Minister.
Madam Speaker, I beg to move that the tax amendment, no. Madam Speaker, I beg to move a motion that the Tax Procedures Code Bill 2026 be read for the second time. I beg to
Seconded by Honorable Amos, Maxi, Dr. Yume, Isaac, Patience, Dakasi, Kathy, Abwoli, Atoki, Honorable Adoa, Honorable Alanyo, Vicky, Omoding, and Silo. And then Lillian, Egomba, Gureme, Honorable Gureme, and Honorable Phyllis. Speak to your motion.
Right, Honorable Speaker, briefly the object of this bill is to amend the Tax Procedures Code Act to revise the penalties for penal tax relating tax stamps electronic receipting and electronic invoicing, and provide for waiver of tax outstanding as at 30th of June 2016. I submit, Right Honourable Speaker.
Thank you. Chairman is ready to report, and it has now minority report.
Right Honourable Speaker and Honourable colleagues, this Tax Procedures Code Amendment Bill was forwarded to the committee, and the committee hereby reports. The committee observes and recommends 1. Penal tax for tax stamps. Clause 2 of the bill proposes to reduce the penalty for tax stamps to 100 currency points, equivalent to 2 million, from 2,500 currency points, equivalent to 50 million. This penalty applies where a person is found in possession of goods on which a tax stamp is required but has not been affixed. The ministry identified and indicated that the current penalty of the 50 million Uganda shillings, although deterrent, has been found difficult to pay, especially for businesses with small transactions. In such cases, the existing penalties can be disappropriate and may exceed the capital of the business. The proposed amendment introduces a more appropriate penalty for possession of unstamped goods while maintaining strict penalties for the manufacturers who fail to stamp their products. The penalty for manufacturers remains unchanged at the 50 million. The committee observed that although the current penalty of 50 million has a strong deterrent effect, it has proven difficult for businesses with small value transactions to pay. In such cases, the penalty may disappropriate and may exceed the working capital of the affected business. 2. The reduction will introduce a more appropriate and enforceable penalty regime, particularly for small, medium, and small-sized enterprises, while maintaining the same penalty for manufacturers. The committee recommends that Clause 2 of the bill be adopted. Waiver of interest and penalty upon payment of the principal tax. Clause 3 of the bill proposes an insertion of Section 47C in the Tax Procedures Code Act, which provides that any interest and penalty outstanding as at 30th June 16 and is outstanding at the commencement of this act is waived. On 13th of May 2025, you may note, Parliament considered the Tax Procedures Amendment Bill 2025, and the committee report indicated that a similar provision was introduced in 2023 and 2024 by the Minister of Finance, Planning and Economic Development, and passed by Parliament. The proposal was aimed at providing taxpayers an additional time to resolve outstanding tax issues, stabilizing their cash flows and state obligations. The committee observed that many taxpayers have not benefited from this. These 24 amendments were made because the outstanding issues with their respective URA ledger were with the URA ledger reconciliation. Therefore, the committee recommended that the proposed amendment to extend the waiver of interest and penalty upon payment of the principal tax be adopted and encourage URA to clean up the tax ledgers to address the numerous taxpayers' complaints. I think you remember that. Parliament adopted the above amendment, and as such, it formed part of the Tax Procedures Code Amendment Act 2025. The Ministry informed the committee that the waiver is intended to restore the integrity of the taxpayers' ledger and reduce the ongoing disputes, including litigation where URA has faced challenges. By clearing these legacy balances, URA can focus on current and enforceable tax liabilities. Those are the waivers we are talking about, which are either to manage and collect. Which are easier to manage and collect. The measure will also improve the functioning of the electronic tax system by removing outdated and disputed entries, resulting in cleaner and more reliable taxpayer records. This is expected to enhance compliance and build greater trust between the taxpayers and the tax authority. The committee observed that many taxpayers were unable to realize the benefits of the prior legislative amendments due to persistent discrepancies in the URA ledger reconciliation. And 2, the proposed amendment under Clause 3 of the bill will enable these taxpayers to benefit from the amendment for the specified period. The committee therefore recommends the Clause 3 of the bill be adopted. Revision of penalties for non-compliance with electronic fiscal devices. Clause 4 of the bill proposes an amendment to Section 93 of the Principal Act to review the penalties for non-compliance with electronic fiscal devices, and it is imperative to note that this section was amended in the Tax Procedures Code Amendment Act 2025 by imposing a penalty to double the tax due on the goods or services. The amendment is changing the penalty to double the tax due to the goods and services of 10 currency points, whichever is higher, for both non-use of IFRIS devices or for non-issuance of an e-invoice or e-receipt or tampering with an electronic fiscal devices. The committee was informed Ministry of Finance that under the current law, the penalty is tied to double the tax due on the goods or services. This approach worked well. This approach worked when the IFRIS applied mainly to VAT registered businesses, where the tax due was VAT. However, IFRIS has now been extended to businesses that are not VAT registered. In these cases, there may be no identifiable tax on the transactions, making it difficult or impossible to apply a penalty based on the tax due. This creates legal uncertainty and inconsistent enforcement. The amendment addresses this gap by introducing a minimum fixed penalty through a currency points threshold. This ensures that the penalty can be applied consistently across all businesses, including those outside the VAT system. The committee observed that the penalty was set at double the tax due on goods and services. This worked well for VAT registered businesses. However, IFRIS has been extended to non-VAT registered businesses, and in this case, there is a challenge in identifying the tax due on the transaction. This makes it difficult for URA to calculate and apply the penalty consistently. It has also led to legal uncertainty and uneven enforcement, and this amendment introduces a clear penalty which can be applied to all businesses where VAT registered or not, ensuring consistent enforcement. The amendment will thus ensure compliance with IFRIS. The committee recommends that Clause 4 be adopted. In conclusion, Honorable Speaker and colleagues, the committee recommends that the Tax Procedures Code Amendment Bill be passed.
Thank you. It does not have an amendment. It does not have a minority report. There is a motion.
Madam Chair, let me, first of all, we want to thank the ministry for really looking at the ledgers. Ledgers have been a big problem to this country, to the taxpayers. The only problem where you have done is that even by the time we're correcting the mistake, many taxpayers have already suffered because they have been taking money, they would apportion it between principal and interest. I would propose that for purpose of now, we need you to go back and review this. The reason I'm raising it, the best period would have been up to 2020, but you have decided to do it up to 2016. The ledgers came in place from 2011. Here were 10, in fact 2011, that's when they efficient. Yes.
Chair, the information I want to give my colleague is that, yes, the ministry, the effort that has been put up to 2016 is commendable. However, the business rules that prioritized the payment of penalty and interest over the principal came in force in 2018. So I think for me, to reinforce your point, would be to look at the extension of the penalty waiver, but maintain 2016, and then we get a report next year to see how the taxpayers have utilized this window to benefit from this measure.
I have no objection to that. That's why I'm raising that we need a minister to go back, to review it. We are aware you will become back as a minister. If you miss, we shall be... He's working for his job right now. You have to review it because the people who lost would have been even more beneficial up to 2020. As you have said, 2018, where they would come and first remove interest and they leave the principal. Now, the principal has accumulated. Because now the principal accumulates, it attracts again interest and the penalty. We tried to solve this this financial year, whereby we pushed it to June 2026. Now, since you have agreed that we want to move in that way, we are going to say that anybody who pays his tax, principal tax, and so interest and the penalties are waived up to June 2027. Let us add 1 year as we also resolve this. Otherwise, I would have asked for 4 years. But for purposes we resolve this, let us ask for what? 1 year. Sure. I think that would be better, a win-win situation.
True. Jana first.
So, Right Honourable Speaker, I have a different opinion. In principle, what government is asking us to do is to do retrospective legislation, meaning there are guiding principles for you to do that. First of all, you must do it with facts. Unlike the other taxes going forward where we can project, this one means there is certainty. They know who by 2016 had not paid taxes. Those people must be brought to the attention of Parliament. The risk is you can pass when they have hidden. There is a taxpayer with billions and billions 2016 who has been hiding, dodging. And now they bring here for all of us to pass, and then some few people will go and get a portion of that money owed to government, and they benefit from it. So my point is, because we are legislating backwards, the Ministry of Finance on URA should lay the facts here so that anyone can look at that list and say by 2016, the following companies or individuals had not yet paid. So we are looking at 500 billion, this one 300, 600, so that when we waive, we are sure as Parliament, because a taxpayer who had struggled to comply by 2016, a taxpayer that had struggled to comply to do his or her part by 2016 is being put at a disadvantage with this one who maybe raised objections, went to court and did this, and now they are coming 10 years after to benefit. So I oppose it unless the ministry can bring the comprehensive list of all these taxpayers that they want to waive. Otherwise, you are going to miss money. And the minister has been looking at us to help. And I thank my brother, the honorable brother from Western Youth, has been asking this side, you are not telling us where we can get money. Now there is money here, which can be recovered. There is money here which can be recovered. This is something that has not...
Honorable Minister, Honorable Dur raises a pertinent issue, very pertinent. Unless you're saying, even when we pass this, on Thursday, you bring for us the list.
Right Honourable Speaker and Honourable colleagues, I appreciate my brother, Honourable Dur, for diving into details. But I want to give him comfort, like my brother Nandara has said. Out of experience, in interaction, and that's why the Honourable Nandara has put it straight. Largely, we have been suffering to clean the ledgers, and these ledgers affect the lowest person. Whereas I agree with you that the minister can provide details here, but not necessarily tomorrow, or hold this passing of the bill. It is true that this comes as a relief. We've been talking about waivers, people coming individually asking for waivers. So this actually creates a clean and a wider extent of the waiver to enable our even medium and low taxes. Yes.
Madam Chair. Madam Chair, you've been talking. Madam Chair, this particular provision has been brought basically to clean a lot of outstanding liabilities from very many companies. And one of the objectives of government also is to support the private sector to rejuvenate. And by doing this, it will help basically cash-strapped businesses to actually enlarge their cash flows. And these are mainly low-level businesses. And honorable members should realize that the Minister of Finance normally come here to tax exempt certain big names. But this one here is a very comprehensive. Everybody is in the basket. So without actually bringing those names here, Honorable Jonathan, is that these are tiny, middle SME companies that have been actually affected. Please.
Madam Speaker, the clarification I want, and I am really thankful that Honorable Paulo Mara is telling us that there are very many. You see, in Parliament, and when you are addressing issues of facts, it means these facts are within your knowledge. You cannot come and say very many. How many? And you are saying these are small companies. Who is that company? That's what I am requesting. It should come here list. Because it appears now from your submission.
No, we need that list.
From yes, the point I'm making is from the submission, they are well versed with who these companies are there. Yes,
Honorable, I just need your commitment that you're bringing me the ledgers.
These are ledgers like a bank. What will happen? Yes, my brother, they will go on the trip that all those whose tax are outstanding, because URA is now electronic, up to 30th June 2026, all the names will come with the amounts and they will be in a print. By the way, whenever you ask for a refund in URA, they will come for you to a hearing for your investigation. So I asked what they came for me. They wrote to me and they brought a book that you have been one of those who have been already listed to withhold. So why didn't you withhold? So because I never withheld, they charge. And the book came with my name. So I want to state it. It's very easy. Yeah, published us. So on that, this is very easy, my brother. It will be done. Yes.
Madam Chair, and the chairperson of the committee is aware, we tried very much to invite Minister of Finance and his team to solve this matter, but the minister was busy. We received information that among the people who are going to be considered, we have case in TAT. And if we do not handle this matter carefully through analysis, government will lose substantial amount of money. URA has case in TAT, the tax tribunal. And we requested the Minister of Finance to come and we discussed this. Honorable Mos was not there. Honorable Musas was not there. And even the technical people are not there. For us to really resolve this, we would not be in this situation. And therefore, I want to agree with the Honorable Dur and the Madam Speaker that this list needs to come so that government does not lose resources.
Honorable members, one thing I can assure you, I am going personal to get this list from URA. I can commit that as a speaker, and when I leave office here, when I leave this place, I'm going to write to URA to give us that list. Mm-hmm.
Madam Speaker, I want to make a middle ground with this rider. That as Parliament we continue to learn and get new precedences. And one such will be when you get for us the document that should have come from the executive. But we appreciate your direct involvement. I wonder how you will now lay that document for us, or you will just pass. I don't know how you will guide. But the middle ground I want to propose The middle ground I want to propose is that for the safety, as a safety net, let's deal with the penal tax and interest and not go and waive the tax due. So that it harmonizes with the spirit of what we have been doing, that whoever pays can. We can waive the interest, the penal tax, and then the interest. But the principle should remain on record until Parliament has satisfied itself. It's a warning that I would like to come. Otherwise, after the list has come,
Minister, are you hearing? We leave that part.
I can repeat for the benefit of the minister. Here you seek, and you have worded your title and the drafting in a very careful manner, but I think that it was intended to cover something from Parliament. The spirit that we have had in the past 2 or 3 is that if you are able to pay your principal amount, the interest and penalties is waived. That's what we have been doing. I am proposing here that instead of the blanket waiver of both the principal sum and then the penalties and interest, this provision relates only to penalties and interest. We first we remain on the record until we get this list.
Supplementary.
And I will take your information.
I would like to appreciate where you're going, but
first appreciate where I'm coming from.
Thank you. I want to appreciate where you're coming from, but I'm not sure where you're going now. However, from our discussion, and Honorable Nandara will testify, and other members, that in application of the penalty and interest, somehow the principle was being affected. So when you leave it behind, you're not helping the taxpayer, and even the ledgers will remain disorganized. Yeah.
Make it like this. Before, Madam Speaker, before 2018,
Honorable,
let me just make it just a small.
Honorable, when you're doing a waiver, even if you're in the bank, you would rather waive off the penal tax and interest, but remain with the principal. Remain with the principal. Because the principal affects the...
Chair, let me give an example so that this House understands. If you supplied the government, when you did a road, you issue an invoice. The rules of VAT require that when you issue an invoice or payment, you account for VAT, whichever is area. We know that the government stock of areas are in trillions, and there are many businesses who have suffered, who have had to sell property because they have supplied and not been paid. The Honorable Nandara, what is raising is that when the business rules were introduced, someone who had a principal of say 100 million and paid 80 million, the business rules went to remove penalty and interest and never touched the principal. So as we speak, what the minister is faced with and the URA is that you have an unrealistic book entry of areas that is uncorrectable and is of principle. Yet the people, yet actually the taxpayers have paid over and above the principle before. And you are driving businesses into bankruptcy. What we want to avoid in this House is having the minister to come next year with peaceful requests of tax waivers like we have seen in the recent piecemeal. So I want to appeal to my colleague that what I agree with him is that we should have transparency. The ministry and URA can actually publish the entire list from 2016, and the country should know. But we should not look at this measure from just saying that the principle has been outstanding. No, there are people who have paid over and above the principle, but it went into penalties.
Madam Chair, one of the one thing, that's why 2018 came up, to cap interest. Initially, if you had 1 million, the interest would accumulate unlimited until you get that 1 million has come to even 100 million. Now, when you are going to pay, they don't remove the 1 million you had first. They take money from the interest was and the penalties first. That's why those ledgers have really unrealistic values. I agree there are so many people.
What is your suggestion?
No, I'm coming. I'm going to suggest. I want to tell you, this waiver is not the first time to waive here tax. We have waived the tax here with the penalties many times. In my time, I can think. I know one time there was a big taxpayer who benefited 36 billion, but he was in high court. You said the court of tax appeal. 36 billion, we waived, he got it, and the case came out. Now, that's true, there will be a problem. Now, what I want us to agree is one, that the Speaker has promised is going to write to that. But my thinking, the best, as you write, URA and the Minister of Finance should publish all the lists of those people who have outstanding taxes on 30th June 2026. And Madam Speaker, 2016. And that's now two, just 1 minute so that my brother you come. Two, as a way out, because that's why we have agreed with the penalties. We have agreed that we move it for what? 1 year. As we clean, because even if we're talking of 2016, those 2 years between 2016 to 2018, by capping and interest, there are many people still who suffered. The best period, who have suffered. The best period should have been 2019, 2020. But since the minister has agreed that he's going to review it, it will be good. Okay. Well, we are going to be here. We shall be coming at the committee as taxpayers, as consultants, so we shall come back with the information.
Yes.
But we want to state, it is very important that we look at it. Now, when you have raised the issue of government taxes not paying, that's true. Many people have gone to the banks to borrow to pay VAT on behalf of what? Government. And the government has not paid them. That's why you see we made a law that all contracts of government, now that one came later when people have already suffered, they will be deemed to have paid what? VAT. The reason why it came, people were dying. And Madam Speaker, I want to assure you that most of the people whom they are going to say they are going to waive have paid their taxes. The only difference is the penalties, which are what? Accumulated account with looks like principle. But the majority who are the few who are going to benefit with big ones, they are very few.
Madam Speaker, I think I have to put it on the record briefly. I had started by saying that when you are legislating backwards, you must have the facts. If you don't have the facts, then you are likely to make a mistake. From the submissions from both sides, they actually tell me that by 2016, URA was demanding me 100 million, both principal and penalties and etc. But of that 100 million, the actual tax was just 50 million. I'm just using it graphically for members. So 50 million was the tax I was supposed to pay. But 50 is now in terms of penalties and interest and etc. So when I get my money, which is 50 million, and I go and pay into URA, instead of them charging it against the tax, they would prefer to charge it first against the principal. Now that the interest and the penalty. Now that even makes it easy. URA is not just an organization that is selling maize by the roadside. This record is there. They can now go and say that since Parliament has now made a pronouncement, we had charged Honorable Odur 50 in penalties and interest. Yet Parliament's intention was it to be charged on the principal. So now we adjust and then charge it on the principal. And because Parliament has waived the interest, it falls. That's what I'm asking. It makes sense that way. Because you have put somebody else at a disadvantage. That person who by 2016 was under a lot of pressure and made commitments and paid theirs is now being disadvantaged. So, Madam Speaker, I still agree with you that these facts need to come. I don't have any particular company in mind, but it would be good for transparency.
Those facts. Yes, Honourable Minister.
Thank you, Madam Chair. Madam Chair, what we are seeking to correct are the outstanding balances in the ledgers, which actually cannot be corrected. How did they arise? Some of them were wrong accruals, I've paid, but there is an outstanding interest, assumed interest remaining, and then you keep accruing it. It still stands in the ledger on your account now. So what we are proposing is to allow us in the law to clean these ledgers so that people are clean on a clean account. Madam Speaker, providing the list of these taxpayers is something easy, because we are telling you, allow us clean the ledgers. Extracting information from the ledgers is not very difficult. I want to commit that we will provide you this information and also go further to publish this information for the public to know.
Thank you.
Madam, the second point, Honorable Mafavi is saying that we have been allowing offset of penalties, interest and penalties for the last 3 years, and is asking, can we extend for another year? I agree, Right Honorable Speaker, because this has enabled most of our people settle their tax obligations, but there are also those still struggling. Maybe if we give them another year, they'll also be able to reorganize themselves and pay. So that one, we can bring an amendment. Those who are good at drafting can draft for us something in that regard.
Thank you.
Then, last one, on Honorable Kateshumga is saying the ideal would have been 2018. I agree. However, let's begin. Next year is not far. Let's begin. We see how it works. If it works well, we can bring it to 2018. The most important thing, Madam Chair, is to begin. And I want to really appeal to the House to support us in this regard with the amendment which Honorable Mafavi has proposed. Can it be drafted? No, we want to be sure what we are amending.
I put a question that the Tax Procedures Code Amendment Bill 2026 be read for the second time. Those in favor say on the contrary, nay. The ayes have it.
The Tax Procedures Code Amendment Bill 2026, Bills Committee stage. Clause 1.
Clause 1. I put a question that clause 1 stands part of the bill. Those in favor say on the contrary, nay. The ayes have it.
Clause 2.
I put a question that.
Thank you. The clarification I want from the minister or the chairman of the committee is to tell us how much, in terms of the amount that we are going to.
That is clause 3.
Yes, yes.
That we want to. I put a question that clause 2 stands part of the bill. Those in favor say on the contrary, nay. The ayes have it.
Clause 3.
Clause 3.
So, Madam Chair, I require clarification from the minister or the chair of the committee to tell us in certain terms the actual amount that is involved in this waiver.
The actual amounts of the waiver. First of all, let's first have the amendment of Honorable Nandala as you get for us the amount.
Minister, does it harm us if we added here that the list of the waived tax will be published? No, just putting here.
Not in the law. Not in the law.
Not in the law.
That is administrative.
Confidentiality clause.
Okay. Okay, fine. For me, I want to I want to move an amendment that all the principal tax outstanding at 30th June 2026, if paid by 30th June 2027, the penalties and the interest are waived. The justification is to allow everybody to benefit in the process.
You repeat it.
All the tax outstanding as the 30th June 2026 are paid by 30th June 2027. They were moving it 1 year. The interest and the penalties due will be waived. By 30th June, we've given it 1 year. 27 will be waived. If you pay all the taxes outstanding as at 30th June 2026 with its penalties, if the principal tax is paid by 30th June 2027, the interest and the penalties will be waived. Thank you. You have understood it?
Yes,
Chair, just for polishing, I think that is Section 47, waiver of interest and penalty on payment of principal tax. So according to what Honorable Nandala is suggesting, and better polishing it, any interest and penalty outstanding as at 30th June 2026 shall be waived where the taxpayer pays the principal tax by the 30th of June 2027.
Madam Chair, I agree.
I put a question that Clause 3 be amended as proposed by Honorable Nandala and further polished by Honorable Karim Masava. Those in favor say and the contrary nay. The ayes have it.
Clause 3 as amended.
I put a question that Clause 3 as amended stands part of the bill. Those in favor say and the contrary nay. The ayes have it.
Clause 4.
I put a question that Clause 4 stands part of the bill. Those in favor say and the contrary nay. The ayes have it.
Title.
I put a question that the title stands part of the bill. Those in favor say and the contrary nay. The ayes have it.
Motion for resumption of the House.
Honorable Minister.
Madam Chair,
that's why we shall miss Honorable Semujo.
Madam Chair, I beg to move a motion that the House resumes and the committee of the whole House reports thereto.
I put a question that the House resumes and the committee of the whole House reports thereto. Those in favor say and the contrary nay. The ayes have it.
Report of the Committee of the Whole House.
Honorable Minister.
Madam Speaker, I beg to report that the Committee of the Whole House has considered the bill entitled the Tax Procedures Code Amendment Bill 2026 and passed it with amendments.
Thank you.
Motion for adoption of the report of the Committee of the Whole House.
Right Honorable Speaker, I beg to move a motion that the report from the Committee of the Whole House be adopted.
I put a question that the report of the Committee of the Whole House be adopted by this House. Those in favor say on the contrary, nay. The ayes have it.
Bill third reading, the Tax Procedures Code Amendment Bill 2026.
Madam Speaker, I beg to move. Madam Speaker, I beg to move that the Tax Procedures Code Bill 2026 be read for the third time and do pass.
I put a question that the Tax Procedure Code Amendment Bill 2026 be read a third time and do pass. Those in favor say on the contrary, nay. The ayes have it.
A bill for an act titled the Tax Procedures Code Amendment Act 2026.
Title settled and the bill passed.
Bill second reading, the External Trade Amendment Bill 2026.
Honorable Minister, can you move the motion?
Madam Speaker, I beg to move a motion that the External Trade Amendment Bill 2026 be read for the second time.
Seconded. Seconded by Honorable Nekesa, Honorable Alanyo, Honorable Businje, Honorable Okasai, Honorable Amos, Honorable Musasizi, Honorable Mudimi, Edakasi, Patience, Kefa, Gabriel, Honorable Gureme, Honorable Max, Honorable Rugumayo, Honorable Melissa, my sister, Honorable Grace, Honorable Noeline, and Honorable Moding and Vicky. Justify and give us a brief.
Madam Speaker, sorry. What we seek to achieve from this bill is to amend the External Trade Act, Cap 69, to exempt imports of vaccines, medicines, medical supplies, pesticides, rodenticides, acaricides, and insecticides from the infrastructure levy and import declaration fee, and to impose an environmental levy on worn clothing and other worn articles. Madam Speaker, I submit.
Thank you, Chairman. Can you give us summary on?
Right Honorable Speaker and Honorable colleagues, the documents that were submitted and the details, as earlier said, are generic. Like the Minister has said, the committee would like to report on the observations and recommendations. The infrastructure levy and import declaration fees under Clause 2 of the bill seeks to amend that Section 3A of the Principal Act provide for infrastructure levy. The proposed amendment seeks to exempt imports of vaccines, medicine, medical supplies, pesticides, rodenticides, acaricides, insecticides from the infrastructure levy. And then Clause 3, the bill seeks and proposes to amend Section 3B of the External Trade Cap 69, which provides for import declaration fees of 1% to be paid on all goods imported in the country for home use. Section 3B was part of the amendments in the External Trade Amendment Act 2025, which introduced an import declaration fees on the importation on goods imported into Uganda. The Minister of Finance informed the committee that the amendments intend to remedy the omission of key items such as medicine, agricultural pest control inputs as part of the exemptions and of the infrastructure levy. The committee observed that the proposed amendment intends to ensure that vaccines, medicines, medical supplies, pesticides, rodenticides, acaricides and insecticides are not subjected to the 1.5% infrastructure levy and the 1% import declaration fees. This move is intended to ensure that access to vaccines, medicine, and medical supplies by Ugandans is not curtailed, since imposition of infrastructure levy and import declaration fees will have an effect on their costs. The provision will promote agricultural productivity, given that the agriculture still remains the backbone of our country's economy. The committee recommends that Clause 2 and 3 of the bill be adopted. Environmental levy. Clause 4 of the bill is to the effect that there shall be a charge, an environmental levy charge on worn clothes and other worn articles at a rate of 30% of the CIF. The proposal creates a third import levy alongside the infrastructure levy of 1% and the 1% import declaration fees. The committee observed the amendment stems from the proposal by the East African Community Heads of State in 2016 to phase out importation of second-hand clothes by 2019 to promote domestic textile industries. And 2, the proposal seeks to achieve a dual objective of protecting the environment by reducing waste and pollution while promoting the local textile manufacturers and job creation through the local manufacturers and reducing competition from the low-cost imports. This is in line with the Buy Uganda, Build Uganda policy. The committee recommends that Clause 4 be adopted. The External Trade Amendment Bill, in conclusion, the committee recommends that this bill be passed.
Minority.
Okay.
Thank you, Right Honourable Speaker. We have a dissenting opinion on 3, where they say we insert 3C, environmental levy on worn clothing and other worn articles. Right Honourable Speaker, government wants to insert Section 3C in the Principal Act to impose an environmental levy on worn clothing and other worn articles at a rate of 30% of the CIF value. Government projects to raise more revenue from the poor people who buy these second-hand items, not by choice, but by necessity. The second idea of protecting the local textile industry without due consideration for their limited capacity, stroke volume, to address the entire population at an affordable fee is very unrealistic. We want to make the record clear that the second-hand clothing, popularly referred to as mivumba, is an essential good, not luxury. Increasing taxes on essentials affects the poor. According to the Ugandan Bureau of Statistics, WUBO's 2024 census and UNDP 2025 reports, approximately 57.2% of Ugandans are suffering from multidimensional poverty, within an addition 23.6% vulnerable to falling into poverty. This means that almost 80%, bracket 57.2 plus 23.6, are poor. To put this into perspective, for an average wage of Uganda shillings 500, a new blazer or suit from a simple shop goes for over Uganda shillings 200, nearly half the monthly income. In a contrast, a highly quality second blazer at Window Market costs roughly Uganda shillings 40. Doubling the tax from 15% to 30% is placing a heavy burden to the very poor who rely on these items for school uniforms, work attire, and basic dignity. Secondly, Honorable Speaker, the government goal of protecting the local industry is premature and doesn't hold water because the domestic textile infrastructure we have as of now cannot support the national demand. For your information, Right Honorable Speaker and members, statistics show that Uganda will export a vast majority of its cotton lint rather than processing it into finished garments locally. This means increasing tax on the only affordable alternative before the local industry, as the capacity, variety, and price competitiveness to repress it creates a clothing vacuum. Thirdly, Right Honorable Speaker and members, second-hand clothing trade employs very many people in Uganda, as urban centers like Kampala, markets. These are not just traders. They are youth and women who rely on small-scale retail trade for survival. An attempt to increase tax by 100% is an attempt to close their business. While we support Buy Uganda, Build Uganda, the proposed Section 3C environmental levy is ignoring the current 80% poverty and vulnerability rate. This tax increase penalizes the poor for their lack of purchasing power without offering a functional, affordable local alternative. CASITA, a multi-sectoral business support association, while appearing before the Committee on Finance, Planning and Economic Development, expressed serious concerns against doubling the tax, the environmental levy, 15% to 30%, maintaining that already traders are subjected to multiple taxes, including import duty 35%, VAT 18%, withholding tax 6%, and currently 15% surcharge. Right Honorable Speaker, although the environmental levy is not VAT, it's expected to increase the taxable import value. In practice, this raises the VAT payable at the importation. Since VAT is generally calculated on the customs value plus applicable duties and levies, as a result, the measure will make imported second-hand garments significantly more expensive from a VAT-inclusive price perspective. The idea of reinforcing the government policy objective of discouraging such imports while protecting domestic production or bubu will disenfranchise so many people in the business and also those who regularly can only afford second-hand clothes. So, Right Honorable Speaker, we therefore urge government to stay this proposal until it provides incentives for local textile manufacturers to lower costs before imposing a punitive levy on clothing. We object to doubling the environmental levy on one second-hand clothing that make up the vast majority of the clothes purchased by the middle and low-income Ugandans. I submit.
Thank you.
Thank you, Right Honorable Speaker. Right Honorable Speaker, I want to appreciate Honorable Nabukenya Blender for supporting our initiative to Buy Uganda, Build Uganda. Madam Speaker, this is our justification for this proposal, and I want to read verbatim. The measure is intended to address environmental concerns associated with importation of second-hand clothing, much of which quickly becomes waste and contributes to landfill pressure and pollution. By increasing the cost of these imports, the levy is expected to reduce the volume of raw quality clothing entering the country and promote more sustainable consumption. Madam Speaker, this amendment will also support domestic textile and garment industries by reducing unfair competition from cheap imports, thereby encouraging local production, job creation, and value addition. The proposal is intended to generate additional revenue to government from widely traded category of goods. Madam Speaker, overall, this proposal advances environmental protection, strengthens local industry, and enhances revenue mobilization. And with this justification, I invite colleagues to support our proposal, as the committee has also supported us in the bill.
Honorable Semuji has talked to me something. Madam Speaker, we grow cotton. First of all, I want to make some clarification. Somebody has sent me, Madam Speaker, I want you to hear this. Madam Speaker, I want you to hear this. Somebody has sent me a message here. He's saying that I and the Speaker were in partnership in the business. I want to clarify, I don't do any business with the Speaker of Parliament.
Honourable members, I have never been in partnership with the Honourable Nathan Nandala in business.
Yes. Thank you very much. You only said maybe you also have a petrol station, as you do maybe.
No, I don't have a petrol station. I don't do those small businesses. But you have not said that you're married to my sister.
Well,
my relationship with you is in-law.
So those small businesses have kept us going. Madam Speaker.
So those moving around that we have the same business, we don't have. This
Madam
one
Speaker,
is a very rich man.
That's okay. Thank you for noting that. Madam Speaker, we used to grow cotton. I would have been very happy if Honorable Musasidi came up and said, I am banning these second-hand clothes. I am reinstating African textile mills in Mbale. I am bringing little spinning mill. Nyanza textile mill. I would be hearing happier there. Then we would be talking, because I know our bed sheets we used to put on and the uniform used to come from Niger and ATM, African. Yamato was from here, Ugir. For us who had the Yamato, those who had the Ugir. So you are trying to...
Chairman BCU, first have a plan to reinstate the cotton growing. First have that plan before you go into spinning mills.
Madam Speaker, I want
the same way you did in coffee is what you should do in cotton.
Madam Speaker, that's what I'm coming. We still have land. Yeah, you are with us. You are with us. We want to start growing cotton. What I want Honorable Musasidi to do here quickly now is to put a budget that we are going to revamp the factories which we use to consume our cotton. And that one also will be, of course, when you say boo-boo, buy Uganda, build Uganda. The moment we shall consume Ugandan cotton, we shall be building Uganda. Because that farmer will be earning what? Money. The moment he buys his shirt or trouser from Uganda, we are saving forex, which would have gone what? Out. Now, you have come with a levy. Me, I want to propose, for you to be able to act, we increase this levy to 100%. So, yes, so that you get money quickly and develop the what? Those factories. Because for me, I'm very serious. If we don't do that, we are going to always come. You people have seen these clothes which they bring for us second hand. They just throw them. We are helping them to pick. These computers, they were helping. I'm happy you stopped the computers. They bring us second hand things. This has become a dumping ground. Even now, they have started dumping human beings also from America here, as if we don't have a country to us. So we I want to make a proposal in good faith that we increase the levy on second-hand items which enter the country so that we generate our own factories. NICE is here. We can put more money in NICE to produce caps for us and pens. We have people have come here to do things. So if we have been talking about that we were against, we are not. We want this country more than anybody. None of us applied to go to be born in Uganda.
So what is your suggestion?
My suggestion, that the environmental levy on worn-out clothes, not only clothes, items, in fact, let us change this. Environmental levy on all second items imported in Uganda is hereby increased to 100%. Justification to build our own local industries to consume our own materials. I can tell, and that one will do the budget so that we give you the money. I know Moses Ogwaro will support me on this. And we can bring back the spending.
Honorable Nathan, as we have the factories in operation, why don't we do it progressively? We keep increasing. We don't go to 100%. Now you're at 30. Next time you can go to 40. You can.
Madam Speaker, if you look at the report of National Bureau of Statistics, the 2024 report, 31% of Ugandans don't have 2 sets of clothing. 31%. In Karamoja, it is 62%.
Honorable, we are members were in which clause?
We are dealing with the Mivumba.
Okay, let's first put a question.
Can I was just about to finish. If you allow me.
Listen. Let's go to that clause and we debate that clause. I put a question that the External Trade Amendment Bill 2026 be read for the second time. Those in favor say and the contrary nay. The ayes have it.
The External Trade Amendment Bill 2026, Bills Committee stage.
Clause 1.
Clause 1.
I put a question that clause 1 stands part of the bill. Those in favor say and the contrary nay. No. The ayes have it.
Clause 2.
Clause 2. I put a question that clause 2 stands part of the bill. Those in favor say and the contrary nay. The ayes have it.
Clause 3.
I put a question that clause 3 stands part of the bill. Those in favor say and the contrary nay. The ayes have it.
Clause 4.
Clause 4. Yes. After you, Nathan.
Madam Chair, even in the committee I told them, people who buy second-hand clothes don't do so because they want. I was giving you information here. 31% of the population cannot afford 2 sets of clothing. They have 1. That's why when you are distributing these NRM fake T-shirts, they were fighting over them.
At least NRM had fake one. What about PFF?
For us, we didn't have. For us, we had nothing to distribute. So in Karamoja, it is 62%. In Usoga, Madam Speaker, I'm talking about Usoga, where you are. People who don't have 2 sets of clothing in Usoga is 26.
No, stop undermining Usoga.
I am not undermining them. This is a report of the population census.
Don't you want to imagine Usoga what you're thinking?
Madam Speaker, this is the report
the
of the population.
Of the Chawazinga.
This is official report.
No.
The average in the country is 31%, in Karamoja 62%, in Usoga 26%. don't have 2 sets of clothing. This committee colleagues ignored. They don't care about these people in Busoga and Karamoja and elsewhere who have no clothes.
Stop mentioning tribes here.
But this is how it is captured in the report of the census. It's not my report.
Do you know the richest people? Do you know that the Karamojons have cows that they can sell and support the GDP of Uganda?
Madam Speaker, this is a report of the UBOS 2024 Population Census and Housing Report. 31%
Can you give us what is your clause? What is your amendment to the clause?
I want to give a justification. I have said
no. First, give the
4.
amendment.
We are on clause 4, madam. That's what we said.
Give the amendment, rephrase the amendment, and give us a justification.
The amendment is that you
Honorable Suman is here saying we Basoga we are poor. That we only have one cloth.
Madam Speaker, I am very sorry, Basoga are very rich. But this is
Haven't you seen how Honorable Sumani is very smart?
This is what the report says finally.
Okay, let's mean business. What is the amendment?
The amendment is that you leave the second-hand clothes when we build factories, because in the committee meeting we are told
you
that
want
the
us
capacity
to maintain as it is?
As it is, because we are told in the committee by people
Chair.
appeared that the capacity that we have now cannot even serve half the country.
Honorable Minister, you want it to remain as it is? Honorable Nandara wants it as 50.
Let's see.
Madam Chair.
Honorable Nandara is my chairman somewhere. I want to thank him for being a Christian in discussion of these matters, because he has feelings he has expressed feelings for the country, and also the desire to see this economy sustaining itself by encouraging domestic production. Madam Speaker, our proposal is in line. Like you have said, let's make these decisions progressively, whereby now we do 30%, then after 1 year, if 1 or 2 more factories come and we have enough domestic production, we can cross completely. But I am proud, I have put this on record. Honorable Brenda Navo Kenya, when I was in primary school, in my village there in Rwanda, I was putting on a uniform. It was from Naitir. In our village, we didn't know Naitir. We knew it as ginger. It was a new uniform. You would buy it, they tailor it, and you put it on. So it is not true. It is not true, Madam Speaker, that uniforms cannot be produced by our factories. So I thought this would be
Honorable
clear.
Brenda, Honorable Brenda, the uniforms that we give our students, now I'm talking as a director of a school.
Yes.
The uniforms that we give our students are made from Naitil.
Yes.
Just take my clarification. As someone who represents these people that do this trade, most of them, because most of them import these clothes and have their warehouses here in Kaguje, in Katwe. I want to look at the employment spiral that it offers. These so-called hawkers that you see around are not traders that are dealing in necessarily brand new clothes. And the reason is very vivid. One, the production cycle, like someone has spoken, cannot feed the entire market to its letter. Secondly, there are some materials that are not available. And I'll give you an example of a material that you cannot get in Nigeria. It's called gin. You know a material called gin? There is another one called spandex. You understand what I'm saying? Therefore, we are trying to say that what we call old and used materials are not desirable in any country, but they are there for convenience. So, if you bring a deterrent tax of that nature, and I'm happy that you've considered that, let's go progressively. So start with 10%, not 30%.
I put a question that clause 4 stands part of the bill. Those in favor say and the contrary nay. The ayes have it.
Title.
I put a question that the title stands part of the bill. Those in favor say and the contrary nay. The ayes have it.
Motion for resumption of the House.
Honorable Minister.
Madam Chair, Honorable Musas is wearing a second-hand tie. It's not from 90.
Madam Chair,
can you say whether that tie is manufactured by 90? Tell this country.
I would very much be happy
to
put
that
on
is
a
a
tie
classic
manufactured by 90.
Right, wait a second. The Right Honorable Speaker says your beautiful tie is a classic tie. So can you show us the label whether it's made by 90?
Can we mean business?
Honorable
No, we
Minister.
are meaning business. You're wearing.
Honorable Minister.
Madam Chair, before I move a motion, Honorable Nandara Mafavi is my chairman for the accountants in this parliament. He's not my president. He is my chairman of the accountants who are in this house. I now move a motion. That the House do resumes and the committee of the whole House reports thereto.
I put a question that the House resumes and the committee of the whole House reports thereto. Those in favor say and the contrary nay. The ayes have it.
Report of the Committee of the Whole House.
Honorable Minister.
Right Honorable Speaker, I beg to report that the Committee of the Whole House has considered the bill entitled the External Trade Amendment Bill 2026 and passed it without amendments.
Thank you.
Motion for adoption of the report of the Committee of the Whole House.
Honorable Minister.
Madam Speaker, I beg to move a motion that the report from the Committee of the Whole House be adopted.
I put a question that the report of the Committee of the Whole House be adopted by this House. Those in favor say and the contrary nay. The ayes have it.
Bill's third reading, the External Trade Amendment Bill 2026.
Honorable Minister.
Right Honorable Speaker, I beg to move that the bill entitled the External Trade Amendment Bill 2026 be read for the third time and do pass.
I put a question that the External Trade Amendment Bill 2026 be read a third time and do pass. Those in favor say and the contrary nay. The ayes have it.
A bill for an act titled the External Trade Amendment Act 2026.
Title settled and the bill passed.
Bill second reading, the Traffic and Road Safety Amendment Bill 2026.
Honorable Minister.
Right Honorable Speaker, I move that the Traffic and Road Safety Amendment Bill 2026 be read for the second time.
Seconded. Seconded by Melissa, Noelina, Grace, the whole side. Rugumayo, Greme, you're also here. By the whole side. Just fine.
Right Honorable Speaker, the bill is intended to amend the Traffic and Road Safety Act, Cap 347, prohibit the importation of motor vehicles that are more than 13 years old from the year of manufacture, and to revise the environmental levy applicable to imported motor vehicles. I submit, Right Honorable Speaker.
Right Honorable Speaker and colleagues, this bill was considered by the committee, and we hereby report and I'll go directly to the observations and recommendation. Clause 1 is about commencement and application, and Clause 2, the bill proposes to amend Section 15 of the Traffic and Road Safety Act to prohibit importation of motor vehicles which are 13 years old or more from the year of manufacture. Initially, the prohibition was for motor vehicles which were 15 years old or more from the year of manufacture. This means that if the proposal is adopted, the motor vehicle can only be imported into Uganda if it is 13 years old or less from the year of manufacture. According to the Minister of Finance, the purpose of this amendment is to address environmental and economic concerns. Older vehicles are generally less fuel efficient and produce high emissions, which contribute to air pollution and environmental degradation. In addition, older vehicles tend to require frequent repairs and replacement of spare parts. This increases demand for imported parts, placing pressure on the foreign exchange. By limiting the importation of the older vehicles, the measure encourages the use of newer and more efficient vehicles. This is expected to reduce pollution, improve fuel efficiency, and lower long-term maintenance costs. The committee observed, not all older vehicles cause pollution. Many you'll excuse me, we've been with used clothes. Many used vehicles imported in Uganda from Japan and other regulated markets undergo pre-export inspection and are well maintained. The actual emissions depend on other factors such as proper maintenance of the vehicles, installation of emission controls, than on age alone. Blanked age-based prohibition overlook these realities and may not deliver the intended environmental benefits. 2. Majority of Ugandans rely on affordable and used vehicles for personal and commercial mobility. Reducing the age limit to 13 years will significantly increase the average price of imported vehicles by making personal transport less accessible to middle and low-income households. 3. Although government has invested in motor vehicle inspection facilities, little has been done to inspect vehicles already in use in the country. Government should focus efforts on ensuring these vehicles are not degrading the environment through regular inspections. 4. Government should undertake the accreditation of mechanical garages to ensure that they have the expertise to maintain vehicles in the proper conditions. And 5. Uganda lacks affordable new vehicles financing. I beg your pardon. Uganda lacks affordable new vehicle financing and adequate public transport alternative. The committee therefore recommends that government should undertake compulsory annual inspection for private vehicles and biannual inspection for commercial vehicles to ascertain their roadworthiness and ensure the reduction of emission levels. And 2, Clause 1, subsection 2 and 2 of the bill be deleted and the cap of 15 years be maintained. Environmental levy. Clause 3 of the bill seeks to amend Schedule 3 of the Traffic and Road Safety Act, Cap 347, and the legal implication of the proposed amendment is that the importation of the motor vehicle which is 9 years old or more from the year of manufacture will attract the environmental levy of 20% of the CIF value. Item 2, 10 years old or more from the year of manufacture will attract an environmental levy of 30% of the CIF value. 3, 11 years old or more from the year of manufacture will attract an environmental levy of 40% of the CIF value, while the 12-year or more from the year of manufacture will attract environmental levy of 50% of the CIF value. The committee was informed by the ministry. The purpose of this graduated structure is to discourage the importation of older vehicles by making them more expensive. It encourages importers to bring in newer and more environmentally friendly vehicles and also enhance revenue collection. Overall, the amendment supports environmental protection and promotes the use of newer and more efficient vehicles. The committee observed that 1, the current provision under the Principal Act provides for 50% of the CIF value for a motor vehicle which is 9 years old or more from the year of manufacture. And 2, roadworthiness and mileage matter more than age alone for environmental conservation. Imported vehicles of 9 years or more, as provided for in this current law, can often have significant lower mileage and are in a better overall condition with intact emission control systems compared to many vehicles on the Ugandan roads that suffer poor maintenance. Therefore, emissions are driven primarily by inadequate servicing rather than chronological age. And 3, penalizing importation of vehicles solely on age overlooks these well-maintained low mileages which may even emit less than poorly maintained local vehicles. 4, high levies of up to 50% of CIF value will substantially increase vehicle costs, pushing importers and buyers towards smaller engine vehicles to minimize heavy taxes. And with limited reliable public transport options, Ugandans rely on private vehicles. The proposal will affect the affordability of these vehicles. The committee recommends that Clause 3 be adopted with a proposed amendment to Item B4 by including vehicles which are 12 to 15 years from the year of manufacture. In conclusion, the Traffic and Road Safety Amendment Bill 2026 be passed subject to the proposed amendments by the committee. I submit.
Thank you. You have a minority?
Thank you, Right Honourable Speaker. We have a minority report on the Traffic and Road Safety Amendment Bill 2026. Points of dissent are the bill proposes to reduce the import age limit for motor vehicles from 15 to 13 years, yet offers no convincing evidence such that a measure will meaningfully improve road safety and deliver environmental benefits. The second one is that the bill seeks to increase the environmental tax on imported vehicles in a way that disproportionately burdens ordinary citizens, small businesses, transport operators, and those who depend on the used car market. The third one is the bill will make it more difficult and costly for current owners of older vehicles to repair, maintain, or replace their vehicles, further eroding the livelihoods of those already struggling with economic hardship. The fourth one will be the bill focuses primarily on the second-hand vehicles, while others significant environmental challenges such as plastic pollution, hazardous chemicals, industrial emissions, and untreated wasteful water are left largely unaddressed. The fifth one is that the bill risks undermining the repair economy, the spare parts trade, and the long-standing principle of reuse and refurbishment, all of which are essential to a responsible and sustainable environmental policy. The sixth one is the exemption of goods vehicles calls into question the claim that the bill is motivated purely by environmental concerns. The last one is that the bill, though presented as an environmental measure, appears in substance to primarily a revenue-raising instrument. Clause 1. The gist of the minority here. Clause 1 is the commencement and application. Right, Honorable Speaker and Honorable colleagues. This clause sets the commencement date and outlines transitional provisions of vehicles already in transit. While a short adjustment period is permitted, there is no meaningful protection for citizens who already own older vehicles and depend upon them. Reducing the age limit from 15 to 13 years will inevitably restrict access to affordable vehicles. This restriction will be felt most acutely by teachers, traders, transport operators, and families who rely on the second-hand market to meet their transport needs. For more Ugandans, an imported used vehicle is not a luxury but a necessity. It supports small businesses, enables family mobility, and is vital for day-to-day survival. If policy shifts makes these vehicles less accessible, an immediate effect will exclude teachers, health workers, market vendors, and small business owners for affordable transport. The resulting burden will ripple across the broader economy, increasing cost of goods and services and diminishing economic opportunity. Transport is central to the functioning of our society. It underpins development, education, commerce, and access to essential services. When the cost of acquiring and maintaining a vehicle rises, it is the ordinary citizen who suffers first and most, not the state. Clause 2. Amendment of Section 15. The clause reduces the import age limit. It's the same thing. Let me go to clause 3 now. Schedule 3. This clause reduces a new environmental tax on imported vehicles, a move that will inevitably increase the cost of transport and place additional financial strain on ordinary citizens. Although presented as an environmental measure, the principal consequence of the new tax will be higher vehicle prices for buyers, importers, and are certain to pass on the cost to the consumers. Although presented as an environmental measure, the principal consequence of the new tax will be higher vehicle Prices for buyers as importers are certain to pass the cost to consumers. Dealing in the markets, such as Chiseka and Nakawa, will respond by raising prices, making vehicles that were previously affordable for social workers, essential workers, and small traders unattainable. In this way, the policy imposes a hidden burden on the public, even as it is presented in environmental reform. Such as a policy should be allowed to increase transport costs to citizens already struggling with high fuel prices and living expenses, calling it an environmental measure, risks reducing serious reform to mere justification of higher taxes. Clause 3, environmental consistency. Right, Honorable Speaker and Honorable colleagues, sound environmental policies values the principles of reuse, repair, refurbishment, and extended product life. Many older vehicles can be properly maintained and upgraded, which is often a more responsible environmental choice than premature replacement. Mechanics, spare parts dealers, and garage workers depend on a steady market for repairable vehicles. Should the bill further restrict the import and affordability of older vehicles, it will undermine these trades and weaken the culture of repair that supports both livelihoods and sustainability. Yeah, firing tear gas in such case. Purchasing new product does not necessarily advance environmental sustainability. In many instances, it encourages waste consumerism, extending the lifespan of repairable vehicles, which is often more sustainable and economically prudent path. Clause 3. Effect on existing vehicles. Right, Honorable Speaker and colleagues. Although the bill does not directly impose new levies on vehicles already in use, its effects will be borne by current owners. As importing affordable used vehicles becomes more difficult and costly, replacement becomes impractical. Spare parts too are likely to become more expensive and harder to find as the market for older models contracts. A tax operator in Mukono, Wachiso, may find that replacement parts that have become prohibitively expensive. A small business owner in Jinja may be forced to postpone necessary repairs due to scarcity of spare parts. A family that would otherwise replace an aging vehicle with a modestly priced imported car may find themselves compelled to continue using a deteriorating car. These are not hypothetical concerns, but the real burdens that this policy will impose. Even in the absence of direct taxation, the law will still penalize those who rely on existing vehicles by driving costs, reducing options, and forcing prolonged use under increasing challenging conditions. Still closely, goods vehicle exemptions. Right, Honorable Speaker, the decision to exempt goods vehicles from the levy undermines the bill's environmental rationale. If vehicle age and environmental impact that are truly at issue, then there is no credible reason to exclude goods vehicles which contribute significantly to emissions and environmental strain. Trucks and lorries used for goods and construction also contribute to pollution and road wear. Their exclusion from the bill strongly suggests that the policy is driven by convenience or political considerations rather...
Anifa, can you summarize?
I'm just about to finish, Vice Honorable Speaker. This exemption creates a fundamental imbalance. Private car owners and ordinary citizens that are required to bear the cost, while commercial freight is left untouched, such as selective approach that cannot support the claim and comprehensive environmental reform. Second last. Right Honorable Speaker and colleagues, there is a significant concern regarding the bill through intent. While it is presented as a measure of environmental protection, its structure most closely resembles a revenue measure, raising costs of older imports, narrowing consumer choice, and increasing government collections. If the bill's purpose were genuinely environmental, Parliament would expect a comprehensive and balanced framework that would include robust emissions testing, strict inspection standards, effective enforcement against plastics, over-regulation of industrial waste and chemicals. Instead, the bill appears to target only the most convenient issue, leaving the most significant environmental challenges unaddressed. Recommendation. As I conclude, Right Honourable Speaker and honourable colleagues, we are fully supportive of the road safety reform and responsible environmental stewardship. However, we cannot support a measure that is narrowly focused, that places undue burden on ordinary citizens and lacks the necessary breadth or enforcement to deliver fair and effective outcomes. We therefore recommend that the bill be amended to preserve vehicle affordability, prioritize emissions testing and roadworthiness over arbitrary age restrictions, address pressing concerns such as plastics, hazards, chemicals, and industrial waste, or support the repair and spare sectors and ensure any taxes are fair.
Thank you.
Inconsistent and transparency linked to the genuine objectives. In conclusion, in its current form, the bill risks placing undue burdens on a broad section of the Ugandan public in the name of environmental reform, while failing to address conduct or major polluters. It threatens affordability, undermines the culture of the repair, and restricts economic mobility. For these reasons, we dissent and respectively urge the House to make substantial amendments before any passage is considered. I thank you.
Thank you. Thank you, Honorable Medi.
Speaker. Right Honorable Speaker, the committee, in its observation, made some very good points. But I would like to just throw light to one of the items they earmarked. One, the correlation between pollution and the age of the car has at times gotten subjective arguments. The issue is the mileage and the usage and the maintenance. And the servicing. You might find a car that was driven by you, Right Honourable Speaker, I think it was UBQ, a Land Cruiser, in 2013. You might not have even driven it to acquire 7,000 kilometers in its mileage. So it does not necessarily mean that it has acquired that wear and tear to justify its level of carbon emission in order to pollute the environment. So the issue here is the minister, I remember very well, said, please help me find revenue. I'm going to help you find revenue. Do not come down to 13 years. Maintain the 15-year threshold as proposed so that you capture cars that are en route to Uganda, but also encourage the importation of cars since 2012 probably, because 2012 cars, 2011, when you read the standards of those cars, mainly most of them are carbon emission compliant. So it's up to you to either surrender this revenue and lose it, or work with us now.
Those are how many years? 15?
15 probably.
Yes.
So that we enhance your revenue basket. Therefore, as you are in a win-win and lose-lose, now we are giving you a blank check to hang yourself. Are you pro 15 years, or you want to downsize it to 13 and you lose revenue? The ball is in your court now. Honorable Minister, do you get my point?
There is a letter from Uganda Revenue Authority that makes a justification that when you have the ones of 15 years back, you make a profit of how much? 400 what?
So you might be losing about
Vis-a-vis
400 or above 100 billion shillings, definitely, is what you ought to lose. Now the ball is in your court. Do you need the revenue, or we take it as it is? Thank you.
Yes, yes.
Before
let the elder first.
Before the honourable colleagues
first
come
give
in.
the chairman.
Okay.
Thank you very much, Madam Speaker. Madam Speaker, to begin with, I don't know what formula the minister is talking about. Even the cars which might be producing more emission, which is bad, are trucks. But if you read here, they're saying 9 years old vehicle, excluding goods vehicle. I want him to convince me that the goods vehicle don't produce what? Emission. That's number one. Number two, anything which is 1 week on the road is what? Old. Now, if we're talking about all cars which are coming are old, even if it is one, now, what about those which are below 9 years? Are they new? We need to also to understand what are these ones and ones which are below what? 9 years. Madam Speaker, I have my friend across there called Katesh. Recently, I saw him in a car. I asked him what type of car is that I'm looking for, and he said, you see, this is a hybrid. It has both petrol and electricity. I would suggest that if you want, let us go electricity. We have been here, we're trying to see that we bring in cars which are using batteries and whatever. Now, recently, I got motorcycles which use batteries. Unfortunately, the charge is, I must charge it myself. So if petrol stations also are supported, they have the mechanism of charging it will be very good. So, Madam Speaker, I want to say, the minister might be looking for an excuse that it is environmental. I think you are making it, you are looking for tax. Now, if you want a tax, I want to give also advice as my brother gave. One, new cars are very good, but the tax on the new cars is too high. Definitely, I drive brand new cars, but the tax on it to buy is double the cost of what? Of the car. So you are increasing a tax here, but you are not providing a solution to people who should buy new what? Cars. Secondly, if you are talking about second-hand vehicles, I think we should look at mileage. Let me give, mileage will be the best. I'll give an example. Yeah.
But in most cases, they change the mileage.
Madam Speaker, let me tell you nowadays, it is very easy. Recently, let me give an example. There are people making noise that Nandala is chasing us from the land in Napanga and whatever, which is Bujusu Cooperative Union. I put in AI. Confirm if Bujusu Cooperative Union has land. AI brought the story about the land. This was not making noise, want to grab land. He brought the land we have, and AI has come, is going to solve these problems. I want you to put in AI. Was this car adjusted? It will say yes or no. We better look about AI software, and we will solve this problem. So, Madam Speaker, this is just let us invest more in this thing, and we shall be safe. You will discover a car of 15 years has gone for only 200 kilometers or 1,000. You will get Nandalas, which is 3 years or 5 years old. It has driven the whole country. It is over 200, but it looks new. So these are the things we should what? think about. So when you want tax, let us look at now. In Uganda, we need cars. We need all Ugandans to have what? Cars. On this one, I know it is an environmental problem, but I am also going to propose, we are going to propose to reduce this tax on the cars from 0 to 9. We shall also put, because they are second hand, this one from 9 to whatever we should give, but also those above 12 or 15, you will allow them to come, give it at a rate. You say, any car above 15, this year the tax will be 100%. You don't deter by saying people should bring. That's the best way to do things. A man will say, he competes, I would rather not go for 100%. Let me go and look for a younger what? A younger. Thank you.
Thank you.
Thank you, Chair. The committee, we did thorough analysis on this, and one of the things we discovered, actually, URA, they were happy with our recommendation because it's going to generate more money. Over about 400, they estimated about 400 billion additional to what the minister anticipated. So it's a good proposal, and it's going to help. That is why you see the majority and minority report do agree that we need to focus more. If we can collect more revenue and focus more on the inspection and making sure that the cars that are in the country are roadworthy, it's much better than trying to limit people importing old cars. So I do request that the minister concedes and we proceed and go to committee stage.
Doctor wants to give you information. Okay, let him first concede, then you discuss on committee.
Madam Chair.
Okay.
Madam Chair, I have listened to the arguments brought about by the committee and our colleagues from the opposite side. I am persuaded that we maintain the status quo as it is in the current law for the purposes of harmony and moving forward together.
Yes, Doctor.
But it may have probably in the future discussion. The most important thing I wanted to say is that actually the minister was right. Older cars are known to have more emission than newer cars because there are improvements in the way the newer cars are manufactured in terms of engine technology, in terms of fuel emission efficiency, and other emission controls. But if we are looking at environmental levy, there are other accurate ways of testing actually the engine's emission. And I think that's what the ministry may explore, whether they can develop better tests for environmental emissions.
Okay, thank you. I put a question that the Traffic and Road Safety Amendment Bill 2026 be read for the second time. Those in favor, say and contrary, nay. The ayes have it.
The Traffic and Road Safety Amendment Bill 2026, Bills Committee stage.
You've maintained the status quo. Hey. All of it. You're not withdrawing, we are maintaining. Honourable Member, since this bill has been agreed as it is, the Minister has considered, is making a statement so that we do not send it for assent, but by implication, it is still in operation. Yes? The law is there, yes. The
Thank
law
you.
remains in operation.
Thank you, Right Honorable Speaker. Right Honorable Speaker, this bill was seeking to amend the Traffic and Road Safety Act to prohibit importation of motor vehicles that are more than 13 years old from the date of manufacture, and to revise the import levy of motorcycles. Madam Speaker, from the committee's analysis and also the minority report and the debate in the House, I considered and agreed with the committee that the proposal to amend this section be dropped. What this means, it means that the whole bill has collapsed, because it was more or less a one-clause bill, and since it has collapsed, I want to beg that we don't read it for the third reading.
Thank you.
So, and therefore, Madam Speaker,
The existing bill remains operational.
therefore,
The
Madam
law,
Speaker,
the
yes,
act which is there remains
yes,
operational.
Madam Speaker, you are correct. You are right. If this bill is not passed, if we don't amend, it means the existing law will remain into force.
Yes.
So, by implication, I want to beg the House that I withdraw this bill.
But the existing remains operational. Go ahead. I put a question that the Traffic and Road Safety Amendment Bill 2026 be withdrawn. Those in favor say and the contrary nay. The ayes have it.
Bill second reading, the Stamp Duty Amendment Bill 2026.
Honourable members, will handle only this one. I see people are tired. For your sake, I will do this and then we finish. So, Honourable Minister, please move a motion.
Right Honorable Speaker, I beg to move a motion that the Stamp Duty Amendment Bill 2026 be read for the second time.
Thank you. Seconded. Melissa, Catherine, Dorothy, Stella, by the whole side. And then Vicky and Sue. Just fine.
Right Honorable Speaker, the object of the Stamp Duty Bill is to amend the Stamp Duty Act to require persons carrying on a business of financial services to file a monthly return, to require a taxpayer to retain documents subject to stamp duty for a period of at least 5 years, and to amend Schedule 2 of the Act to revise stamp duty payable on transfers and motor vehicle registration. I submit for the House's consideration, Right Honorable Speaker.
Chair.
Right Honorable Speaker and colleagues, this proposed amendment of the Stamp Duty Amendment Bill was forwarded and the committee considered, and we hereby report. The committee observes and recommends as follows: filing returns by a person carrying on business of a financial service. And clause 2 of the bill introduces a new insertion of clause 7A, which requires a person carrying on business of financial services to file monthly returns of all sums received in respect of the stamp duty paid on the instruments with the Commissioner General. Where the person fails to file the returns, he or she is subject to pay a simple interest of the duty payable for every month during which failure continues. According to the Minister of Finance, currently only insurance companies are required to file stamp duty returns. This amendment extends the requirement of all financial service providers. The aim is to give Uganda Revenue Authority better visibility over financial transactions and ensure that stamp duty is correctly collected and reported. The information will also be helping URA to cross-check transactions declared by taxpayers against records held by the financial institutions. Regular reporting will make it easier for Uganda Revenue Authority to monitor compliance, detect underpayments, and act quickly where needed. It will also improve transparency in the financial sector and support more accurate and reliable revenue collection. The committee observed that 1. The term business of financial services is not defined in the bill, and 2. The provision does not provide clarity on who is required to file the returns under clause 2, subsection 3, and therefore becomes liable to paying the simple interest. The committee recommends that clause 2 be amended to define the term business of financial services and provide clarity on who is required to file the returns under clause 2, subsection 3. Retention of documents or records. Clause 3 of the bill intends to amend section 62 of the Act, and the proposed amendment requires a person who maintains a document or record to retain the document or record for at least 5 years from the date of the document or record generated. The committee learns from the Ministry of Finance, Planning and Economic Development that taxpayers will be required to keep documents and records related to stamp duty for at least 5 years from the date they are created. For example, if a person if a person transfers property today, they will be required to keep all the documents relating to this transaction for at least 5 years for purposes of stamp duty. Currently, the Stamp Duty Act does not clearly state how long such records should be kept. This makes it difficult for Uganda Revenue Authority to carry out audits, especially for transactions from previous years. The proposed 5 years period brings consistency with the existing tax laws as it follows the rule already provided in the Tax Procedures Code Act. This change will clarify the law, help URA verify transactions more easily, reduce disputes, and encourage better record keeping by taxpayers and professionals. The committee observed that the proposal is justified to ease audit and dispute resolution, and 2, the proposal aligns with standard commercial record keeping practices and is not expected to create significant additional burden. Therefore, the committee recommends that clause 3 of the bill be adopted. Amendment of Schedule 2, Item 63 and 67. Item 63, Stamp Duty on Transfers. Clause 4 of the bill proposes to amend Item 63 under Schedule 2 to provide that the stamp duty payable for an instrument of transfer of total value is 3%. The ministry indicated that this amendment increases stamp duty on land transfer from 1.5 to 3%. This duty is paid when ownership of land is transferred. The increase is to raise revenue from land transactions. The committee observed as follows. 1. The current stamp duty for transfer of total value is 1.5%. The proposed duty has thus been raised by 100% points. 2. The increase by 100% points to 3% is a disproportionate burden on the poor and vulnerable, and will raise overall transaction costs, especially to the vulnerable, such as widows, orphans, and also complicate inheritance processes. 3. The proposed amendment is only targeting registered land, of which only 30% of the land in Uganda is registered, and 81% of transfers are for milo/freehold tenure. And 4. The land policy in Uganda encourages registration of land, which would, among others, enable government to generate additional revenue as the tax base expands. And 5. Doubling the stamp duty is a disincentive to formal registration of land. And 6. The proposed increment in the rate of stamp duty for transfer of the total value is too high. The increment in the rate should be gradual. Item 67, stamp duty on motor vehicle, motorcycles, tricycles, and quadricycles. A new tax item has been introduced as item 67 in Schedule 2 to provide for stamp duty on registration or transfer of motor vehicles, tricycles, quadricycles, or motor vehicles. The stamp duty proposed is 50,000 Uganda shillings for motorcycles, tricycles, quadricycles, while for any other motor vehicle is 200,000 Uganda shillings. The ministry informed the committee that the new insertion of the item 67 presents a large and reliable source of revenue that is not yet taxed. The proposed duty is small and affordable, but can generate significant revenue when applied across many transactions. The committee observed that 1. The amendment is intended to increase government revenue by capturing more value from the rapidly growing transport sector. And 2. The measure supports broader transport and regulatory objectives. Increasing taxation will aid the management of the growth of the vehicles, motorcycles, tricycles, quadricycles, which are associated with road safety concerns, congestions, and urban planning challenges. And 3. Currently, motor vehicle owners of motorcycles, tricycles, and quadricycles do not pay non-tax revenue, and as such, the proposed tax at registration is fair. And 4. The amendment strengthens revenue collection while supporting transport regulation and addressing gaps in the taxation. The committee recommends that 1. The stamp duty on transfer of the total value under item 63A be amended as proposed. 2. Clause 4B, item 67A, be adopted as proposed. And clause 4B, item 67B, be adopted as proposed. In conclusion, the committee recommends that the Stamp Duty Amendment Bill 2026 be passed with the proposed amendments. I beg to submit.
Thank you.
Madam Speaker, I will summarize this report, minority report, signed by the same MPs who have signed the earlier ones. I want to ask you are signing yours at night, at midnight. The contentious issues were transfer of land And I will just state we are saying we need to maintain the 1.5%, because government was looking at real estate, but there are also ordinary people who are doing transfers. You die, they are transferring title into the hands of, in the names of your children. Sometimes they don't even have money. So we said this one should be left. It shouldn't be just a revenue measure. And then this transfer of borders. I want to go to the table there. Transfer of motorcycle.
Let's first finalize on land.
Yeah.
Honorable Mr. How many people in your constituency have land titles? No, but seriously speaking, what Honorable, for the first time, really, what he's saying is something that is very serious. Yeah, because and is my friend. He's my very good friend. Honorable Musasi say, you need to get a middle ground on this. Transfer of land titles. It's very costly. People want to have land titles, but they cannot afford. Now, government has even decided to give free land titles. We would actually put money in that project which is giving free land titles.
Right Honorable Speaker, the biggest challenge our people in the rural communities are facing is not what this law is, what we are seeking to achieve here. In the village, there is a land committee at the sub-county, and also another land committee at the district. If you want to process a land title, you pay fees at sub-county level, and you also pay fees at the district level. By the time you get a title, you have spent about 3 million shillings, or even more. And this is a problem which we, as representatives of people, should address, because this money is not official. It is for sharing amongst the committee members. It is supposed to be for free, but they cannot see it until when you have facilitated them.
So how
Madam
much is
Speaker,
official?
this is what is happening.
How much is official?
I think the Minister of Land is the one in position to answer that.
Honorable, do you have something to say?
Thank you very much, Madam Chairperson. The Honourable Minister, the point being raised about stamp duty, saying that actually a person seeking to bring land under the Act is already burdened at land committee level, both at sub-county and district level. And in addition to what you are saying, you are now saying let us increase the stamp duty at the national level. Does that make sense? So I think you need to concede that the policy, government policy, is to bring the land under the Act such that people can use that land sometimes even to access credit. If you increase stamp duty, then you are discouraging people. So it's not about you, but because the process itself becomes too expensive. And I think the majority committee report is talking about 80% of our land is actually not titled. What we should be doing is to make sure that we make this process easier such that the majority of our people have got titles. It increases security of tenure because nobody will easily steal a titled land, but land grabbing, but also you use it as security for purposes, commercial transaction and accessing credit. This is basic economics, I thought. Thank you, Mr. Honorable Minister.
Yes,
Right Honourable Speaker, my comrade and very intelligent colleague, the Honourable Musasizi, I think in a view to look for revenue here and there, was just touching everywhere, but you might end up killing the very same industry that you want. In this case, let me show you. Already you have rental income from people. You understand? You've come here and asked for an increment on excise duty on cement. As if that was not enough, you went for motorcycle registration. This parliament has been very kind to you. You went for fuel. This parliament was very kind to you. You touched everywhere and even was progressive to your second-hand clothes. But now, after someone accumulating all he has remained with, they go and purchase some little land. As they purchase this little land, you also come and say, from whatever savings you've made, now I want to increase the stamp duty for you to transfer it from
on which clause are you?
Mine?
On which clause?
No, I'm talking about...
the more the land is titled,
yes,
the more revenue that we get.
Absolutely.
Then we can be able to tax that revenue.
Absolutely.
So why don't we have more and more land
titled? So we should encourage so that...
And Honorable Musasizi, you also need to give those people who are giving free land titles. Give them money so that we have land titles. We have safety of our land.
We appeal to the Honorable Musasizi we knew, not the one now that the chairperson and Right Honorable Speaker, the record should hold Honorable Musasizi. Honorable Musasizi was one of the people against increment in stamp duty recently. Of course, not from the recent history when he was chairperson of this committee. And we commend him for everything he did with excellence. There is no doubt about that. So the Honorable Musasizi, I want to see the you representing the people of Rwanda who actually want their land titled, having spoken for them here very ferociously that they have been burdened by the fact that land committees, it is kitu kidogo, is too much, and sleeping with the worries of the new Building Control Act that threatens to have their houses erased, and now you come with stamp duty of 3%. Even my colleague from Untoroko, on this one, I think he will agree that we drop it.
Right Honorable Speaker, since the people who are looking for titles are going to construct rentals, which rentals will attract tax? Our Madam Speaker, we have always, as a principle, we always we avoid the taxing at the start. We want to tax at the end.
That was your argument in the beginning.
And also, cognizant that there is already a stamp duty on transfer of titles at 1.5%.
That is Honorable Musasizi, the chairperson of finance. Honorable members, I put a question that the stamp duty amendment bill 2026 be read for the second time. Those in favor say and the contrary nay. The ayes are... This Musaga man.
The stamp duty amendment bill
the
2026. The stamp duty amendment bill 2026 bills committee stage.
You'll put in the clause. You'll bring in the clause.
Thank you, Honorable Musasizi. Let us not be beaten by the fact.
Clause 1.
Clause 1. No amendment. I put a question that clause 1 stands part of the bill. Those in favor say and the contrary nay. The ayes have it.
Clause 2.
Clause 2.
Madam Chair, colleagues, the committee proposes that clause 2 is amended. A, in the proposed subsection, in the proposed sub-clause 2, by substituting for the words proper duty, the words stamp duty. And B, by inserting immediately after sub-clause 3 the following. For the purposes of this section, financial services means 1. Granting, negotiating, dealing with loans, credit guarantees, and any other security for money, including management of loans, credit or credit guarantees by the guarantor. And 2. Transactions concerning deposit and current accounts, payment, transfer, debts, checks, and negotiable instruments other than debt collection and factoring. And 3. Transactions relating to shares, stocks, bonds, and other securities other than custody services. 4. Management of investment funds, but does not include provisions of credit facilities under a hire purchase or finance lease agreement. Justification: 1. To provide clarity to the clause, and 2. To provide for the definition of financial services as used in the clause. Yes, sir.
Chair, are you also including unit trusts here? Okay. Yes.
I've liked the chairman's submission, but he has forgotten one category: money lenders. Money lenders, I don't know where we should add here money what? Lenders. The justification, also money lenders are doing in financial services.
He actually says management of investment fund, but does not include provision of credit facilities.
Why do you leave them out?
Madam Chair.
Those guys are a problem.
Beg your pardon?
Money
Now,
lenders.
Madam Chair, when we were enlisting these purposes of financial services, including management of loans or credit, I think this includes money lenders who give loans.
No.
If you look at it, you are saying business of financial services. And if you are not very careful, money lenders are going to jump out. And these are the ones who are really squeezing our people. Because if we register them to file a return, we shall be getting them on both sides. First on stamp duty, and at the same time on income tax. Unless you are one, that's why you may be fearing. But I know you are not Amos. You are not a money lender. So, Madam Chair, I want to add there money lenders. The justification that they are also dealing in the instruments when they lend money and they earn interest on the income. Is it okay? Thank you, money lenders.
Madam Chair, the proposal by the committee is for clarity, and I therefore agree with the committee and also the addition from Honorable Mafavi. I hear the lawyers call it for avoidance of doubt. Yeah. So we include the money lenders so that it is more clear. I thank you. I submit, Right Honorable Chair.
I put a question that clause 2 be amended as proposed. Those in favor say and contrary nay. The ayes have it.
Clause 2 as amended.
I put a question that clause 2 as amended stands part of the bill. Those in favor say and contrary nay. The ayes have it.
Clause 3.
I put a question.
Madam Chair, I don't know why you are saying they should keep this document. If I went to transfer my land, there will be a government valuer who will value the land. He will attach the value. From that value is when URA will generate what? Assessment. And when they are generating the value, they say attach all the documents. So who keeps the documents? URA keeps the what? The documents. Why is it coming again that URA wants a taxpayer to keep documents, yet when they are doing the assessment themselves, they keep the what? The document. Okay.
I hear my senior consultant here, but the spirit behind this provision is to enable an audit, and it is consistent with the other laws requiring keeping and preserving records. So I do not think it is harmful, because you may not have the audits may need to be carried out and the document is not available. So it's in the favor of the taxpayer to keep the records, so that in case an audit is required, you have something to defend yourself.
I put a question that clause 3 stands part of the bill. Those in favor say and contrary nay. The ayes have it.
Clause 4.
Amendment.
Madam Chair, subsequent to the conceding by the Honorable Minister, and whereas the committee had proposed 2%, we hereby concede and adjust to 1.5%. I submit.
I put a question that clause 4 stands part of the bill. Those in favor say and contrary nay. The ayes have it. Stands part of the bill. I put a question that clause 4 be amended as proposed by Honorable Semuju Ibrahim of 1.5% on lands. On lands. Yes.
What you do here, the 1.5 is the current law.
Yes.
So what you do, 4A is hereby what? Deleted. And Madam Speaker, even if we had time, we would have known the reason. Stamp duty started from 10% on land. People started forging
okay.
What? Value.
We put a question that clause 4A on transfer of lands be deleted. Those in favor say and the contrary nay. The ayes have it. No. You will now amend the other act. Through this one, no. We are okay with 1.5. Clause 4. Clause 4B. Go to 4B.
Clause 4B, I want to ask, because I had presented a table which I wanted to use as a base to propose deletion of this one. When I was presenting my report, I hope that table can be brought. That's the only table I want to use to make the argument. Go down. Yes. Madam Speaker, Madam Chair, you see, we are now requiring people transferring motorcycles, tricycle, and vehicles. First of all, I am shocked. This is also a matter of security. That government should encourage people to, when they are selling, to transfer, and then you know the true owners. But now you are creating a burden. But this particular table tells you what a border man pays. A motorcycle. In my area, there are border people. So you go to the total down, you can see when you total all these taxes, if someone went to buy a border or a motorcycle, government is going to charge you 2.2 in all these fees. Earlier, we were asking to pay for registration. And without wasting a lot of time, look, someone riding a motorcycle, he will pay taxes per litre of fuel, and on average they use 5 litres a day. I have made the calculation here. A border man pays 2.7 million per annum by buying fuel. So in the end, if you have 1 million borders on the road, government is going to be collecting 2.7 trillion when they are using fuel. So why do you burden them that every stage you are asking them at registration, at transfer, they are already paying you every day by consuming fuel. So my proposal is to also delete this one. First of all, it's a security matter. I want people to sell and transfer.
Delete which one?
Delete 4B.
The 50,200.
Yes.
For transfer.
Yes.
Registration and transfer.
Yeah.
For you, when you're registering a car, don't you pay?
Yeah, but Madam Speaker, if government was carrying out research, you will find many people don't want to pay. They just sit and do a agreement. So on the road, you think the vehicle, because they just had the same username, yet Kateshuma bought it long ago. So we should be encouraging people to transfer. And so you don't have to burden them, because already I have told you, you charge a border 2.7 million every year by buying fuel. So really, what is 50,000 for you to stop transfers?
Madam Speaker, I wanted to use the Honorable Minister. When he was with us here, maybe like 7 years ago. Yes. And we were having a broad discussion on issues of stamp duty. The government brought a proposal. On that time we were discussing stamp duty on the promissory note, which we had issued to the Lubowa Hospital at 1.4 trillion. His report, the Honorable Musasizi, came. Instead of the 1%, I remember, he said we should bring it to a flat rate of 100,000 for document registration to facilitate investors and relieve them of that burden. At that time, the 1% would have been, would it be 14 billion or something? 140. And we came from 140 by his report of the committee to just 100,000 on the promissory note. So by principle, and what I know about him, he looks at stamp duty as something which is a hindrance to smooth transfer of business. So would the minister now be pleased to concede on this matter and we move?
By the way,
Madam Speaker.
By the way, Minister, I want to thank you for Lubowa Hospital. Now when you're passing, you can be able to see Lubowa Hospital. I want to take a drive there with the Honorable Senyonyi, the leader of opposition.
Madam Speaker, since you are our speaker, I want to kindly request you not to validate that project. It has
Lubowa.
issues, yes. Even if there is like a small building coming up, the amount of money spent makes it a scandal. So I kindly ask you not to validate it.
Actually, I want to go there and see with the Honorable Law. Honorable Minister, this issue of registration.
Madam Speaker, I am very strong on this issue. Tax has never been good to a taxpayer. But also we must recognize.
From the biblical time.
Yes, we must recognize that the only way we can sustain financing government obligations is through raising taxes from the citizenry. And in return, you give them services. So this is related to transport. We are investing a lot. Like this year alone in the budget, we are proposing 8.8 trillion to spend on transport. Madam Speaker, Chair, this money must be raised domestically by ourselves.
But we have also had a win-win situation.
And I have just considered on stamp
duty. We've considered on lands.
I should also get something from this bill. Yes, yes. I have considered on the land.
Madam Speaker, we're going to give you.
Also give
my younger brother, I'm going to give you one. The motorcycle you're talking about uses fuel, the car uses fuel. Madam Speaker, currently to transfer a car, you pay. We're not saying you don't pay. To transfer a motorcycle, you pay. That's okay. Now, what we're trying to say that the more you put it here, the more people are not going to what? To transfer. Let me give an example. Doctor gives me a car, I just drive. When the police gets me, I say, oh, it is the doctor's car. I have not finished payment. I have not finished what? Payment. So unless you are going to say the law is verified, let us keep the current law of transfer of 30,000 and it will continue. If currently at 30 they are not transferring, what about if you take it to 200? What will happen?
Okay. Once someone has gotten their logbook, they can use it as a security for securing a loan. But if somebody is not able to do the transfer because of the prohibitive figures, then they can't access the logbook. Therefore, when you need money, you are squeezed, you look for land titles, you are not there, the logbook is not yours, so you get stuck. Therefore, for me, I would also agree that we lower the figure. Bring it at least a representative figure. Put something smaller. 30. Yes. But allow people to do what? To transfer.
How many people are speaking?
Thank you.
How many people are speaking? Honorable Nandala talked about 30,000, not so. You are talking about 30,000.
Madam Speaker, the current rate, we want to maintain it.
What is the current rate?
30,000.
That's what we are saying. Let's maintain 30.
So what we have to do, again here we delete.
Yes. Chair.
We've been very kind with Honorable Musasizi. Please. These are the low-income earners. They are business startups. I don't know how you're going to meet your border riders in Rwanda and say. But I don't want to blackmail in this case. Let's leave these guys grow slowly because we've already increased the tax on fuel.
Those are our biggest
so
voters.
No, not on registration. Let us, even when you are applying medicine, you go slow. You don't issue all medication at once. And on this one, even my brother from Untoroko will support.
Honorable, I want to hear from the minister. Currently, we are 30.
Madam Speaker, I hear you. For the purposes of moving forward, can we move from 50 to 30?
Can we? Thank you.
Yes. Thank you.
Now for you.
And Madam Speaker, I move that the question be put.
Motor vehicles, people have money.
Yes.
Motor vehicles, leave it. Let's look at the borders. Vehicles are okay.
Can we?
Vehicles are okay. Let's only do borders. By the time you buy a car, that means you have money.
So.
Yes.
I propose that instead of 50,000, we go by 30,000.
So we are deleting that. Because it's currently 30.
Okay, if that is the case, then we delete.
Yes. So I put a question that we delete registration on a border doesn't favor sale to the contrary. The ayes have it. And then on the vehicles, we maintain it. It stands part of the bill. Those in favor say on the contrary, nay. The ayes have it. Clause 4 is amended. I put a question that clause 4 is amended. Be amended as proposed. Those in favor say on the contrary, nay. The ayes have it.
Clause 4 as amended.
I put a question that clause 4 as amended stands part of the bill. Those in favor say on the contrary, nay. The ayes have it.
Title.
I put a question that the title stands part of the bill. Those in favor say on the contrary, nay. The ayes have it.
Motion for resumption of the House.
Honorable Minister.
Right Honorable Chair, I beg to move a motion that the House do resumes and the Committee of the whole House reports thereto.
I put a question that the House resumes and the Committee of the whole House reports there too. Those in favor say on the contrary, nay. The ayes have it.
Report of the Committee of the whole House.
Honorable Minister.
Madam Speaker, I beg to report that the Committee of the whole House has considered the bill entitled the Stamp Duty Amendment Bill 2026 and passed it with amendments.
Motion for adoption of the report of the Committee of the whole House.
Honorable Minister.
Right Honorable Speaker, I beg to move a motion that the report from the Committee of the whole House be adopted.
I put a question that the report of the Committee of the whole House be adopted by this House. Those in favor say on the contrary, nay. The ayes have it.
Bill's third reading, the Stamp Duty Amendment Bill 2026.
Honorable Minister.
Right Honorable Speaker, I beg to move that the Stamp Duty Amendment Bill 2026 be read for the third time and do pass.
I put a question that the Stamp Duty Amendment Bill 2026 be read the third time and do pass. Those in favor say on the contrary, nay. The ayes have it.
A bill for an act titled the Stamp Duty Amendment Act 2026.
Title settled and the bill passed. Thank you so much, honorable members. Honorable members, tomorrow we shall have a sitting paying tribute to our colleague. I request all of you to be there. And the body will be here in the morning at 10. I request you all come and receive the body of our colleague, our sister, our friend, and we will spend the whole day paying tribute for Helen. And I want to request members, you are all mothers, you are all fathers. This is your first home. And since this is your first home, a problem on one of us is a problem on all of us. When there's a problem on any of us, there are no parties. No parties. This young lady has left behind a daughter. She has been a single mother with a daughter. As Parliament, we must, that is our daughter. That is our daughter. We must build that culture. So I want to leave you to go and organize for tomorrow's sitting as we pay respect to our departed. We'll miss Helen, we'll love her. I am Adiane in the house to tomorrow. We will be here early, but the house will sit at 2. House at the Jand.